services or who would like to connect with you can get to know you. So let us introduce ourselves. Working with Women for Life, Karibu Sana. Let us get to know who is in the room as you get to tell your friends to come here. Alvin Omar from National Police Service Commission. Excellent. We would like to receive the best service from our police. Asanteni Sana. Thank you for being here. Who else is here? Who is in the room? Kindly introduce yourself. Let us do so in the chat section, your name and the business or the organization from which you're coming from. You never know who is looking for anybody. George, freelance animator here. Rekadina Webby from the Dotted Fundraise NGOs and SMEs. Mohammed Bates, electronic retailer. Lily Nyariki, Fred from Mefric Financial Consultants. Keep them coming. I will try and catch up with them. Rose from Family Bank, George from Savvy Markets, Enoch from Media Council. Thank you. Thank you very much. Caroline from Color Africa Group, John from Smart Investments, Flavia, Edwin, Josephine, Karonguni, most welcome. Good to see you. Kelvin Mutisia, Alex Kebaso, Edwin Marrero, we are so honored to have you here. Thank you for taking the time this week to have a conversation with us about money. Now, Benjamin Franklin said, an investment in knowledge pays the best interest. I will say that, pun intended, considering that our partner today is Family Bank. The point is, as we celebrate the Customer Service Week, in which way can an organization show you that they have empowered you if they don't give you the information that you need to make those decisions that will prosper you? World International and Family Bank are here to be able to get you going as pertains to the money conversations. As we continue this conversation, we do have the chat section where you are introducing yourself, and we also have the question and answer Q&A section where once our experts begin to have the conversations on finance and investment, you will post your questions there and they will answer you. To get us started, we'd like to introduce the CEO of World International, Mr. Chris Odongo, someone who's very passionate about business, about entrepreneurs, about helping you create wealth. Karibu sana, Chris.
Thank you very much, Njeri. Really appreciate your introduction. For all the entrepreneurs and the business owners who have joined us today, as you've heard, my name is Chris Odongo. I'd like to acknowledge each and every one of you and tell you thank you so much for joining us and for being part of our conversation. I'd also like to acknowledge the presence of our partners from Family Bank, Joyce Nyawera. I would also like to acknowledge the presence of Phyllis Kimani, our panelists, Kenon Mwiti, Thomas Wariara, and all the other people who are here. Thank you so much for making this event a success. Mine is to give some very brief opening remarks, and I'd like to start off with a proverb that I learned this morning. It is both a Kikuyu proverb and a Zulu proverb. And I don't speak either of those languages, but I will tell you the proverb in English. It says, you bend a tree when it is still young, or you straighten a tree when it is still young. And that is to say that when things are still tender, when things are still small, that is the time when you need to mold them. That is the time when you need to channel them. And today on this particular webinar, we will be talking about financial management. And I know that it's a lot of times these are things which we postpone and we want to do much later on. But I want to encourage you that regardless of the time, it's best to start early it's best to model these behaviors early. If you have children, start them off early. If you have a business, start the culture of saving early. If you have a family and if you're running a home, start the process of putting aside money and financial management early. Do not wait until you're an old tree and you are not able to be bent to start these behaviors. So as you consider, as we start this webinar, just remember, it's best to start early. At Wild International Limited, we are very passionate about working with business owners, working with SMEs, and working with entrepreneurs. We were founded in 2004, and we look at ourselves as an unmatched strategy and entrepreneurship firm. We are here to equip, to empower, and to train you so that you can be able to succeed. We have partnered with many organizations, including Family Bank, to bring for you amazing content, amazing knowledge, so that you can be able to grow. We work with ambitious entrepreneurs who want to grow and who want to go places. And at Wild International, we are part of the Sandbox, and the Sandbox brings together a lot of experts who are gathered to help you. And today we are joined by our experts in financial management and in personal investments who are going to take you. We are joined by Probity Consult and Mwalimu Biashara, and we are going to learn a lot from them. Coming up in the next few weeks, and actually next week on Thursday and Friday, is our conference called the Sandbox Big Baraza. So if you've not heard about it, please know, just go to our social media pages and check out the Big Baraza. You do not want to miss that conference. It's about SMEs for SMEs, and it's going to have more than 500 SMEs coming together. And we would like to invite you to be part and parcel of that. Ladies and gentlemen, welcome to our webinar today, and allow me to invite the next speaker for the session, and that is none other than our partner, Joyce Nyawera from Family Bank, who's the head of customer excellence and customer experience, who's going to give us some remarks about the customer service week. Welcome, Joyce.
Thank you, Chris, and good morning to everybody who has managed to join us this morning. I want to wish you all a happy customer service week. Here at Family Bank, this is something we always celebrate. It happens globally. This year we are celebrating, and we started yesterday. We want, of course, during this time, just to say thank you to all of you, both our internal and external customers, for the support that you have given us. We also, during this time, reiterate our commitment to go above and beyond in serving you. We want to exceed your expectations at every touch point. And of course, we are very keen on getting feedback from yourselves. We normally run surveys throughout the year. During this specific time, during the customer service week, we specifically are running a survey, and we are asking for your feedback. We also want you to nominate the Family Bank staff who serve you extremely well, those you feel are going above and beyond in their line of duty. And we internally are going to recognize them for the steps that they take, just to make sure that you're comfortable at every touch point when you interact with us, whether at branch, whether at contact center, whether it's the relationship manager that comes to visit you. Kindly give us your feedback. We are very keen to hear that from you. Now, how are we celebrating? First and foremost, I want to invite all of you to our branches. Just go to the branch closest to you, whether you're an existing customer or you would like to join us as a customer. Visit our branches. Between today, Wednesday, Thursday, we are closed because of the holiday, and also Friday, just visit us. There's a lot happening in our branches. Friday specifically, we are going to be having a breakfast where we have a meal with you, our customers. So karibuni sana to any Family Bank branch near you. For those of us who are not our existing customers, we want to invite you also. Sign up. We can assure you that this is the bank you want to be in. We are customer-centric. We want to take care of you. And even as you walk this financial journey, let us do it together. Let us partner and go this journey together. Now, while you're at the branches, you might note that during this week, we also have dress themes. Now, the idea is just to make, the week fun, make it vibrant, connect with your customers. So if you walk to any of our branches and find that you're wondering whether you've walked into Nairobi Hospital because everybody is dressed in nurse wear or doctor's wear, or you might have walked into some big hotels kitchen because guys are dressed there as chefs. It's just to make it fun and connect with the kinds of customers that we serve each and every day. So do not wonder if you are actually in the right place. You are in the right place. It's our way of connecting with our customers. So as mentioned by Chris, we are a bank that is committed to driving financial education. I mentioned earlier that we do a lot of surveys, and in the surveys and part of the feedback that we get from you, we have noted that there is always that request that we drive or we undertake some financial education. I think we can never have enough really of financial education. And this is the one landscape that keeps changing and evolving with time. So this is our way today, this webinar is our way of just, again, making sure that we give back to you, our customers, by having this session on financial education. It's our way of empowering you, strengthening you. And we have partnered with Wild International. Chris spoke about that. And they've brought on board some experts in finance and investments. That's Mwalimu Biashara and Probity Consult. Now, without further ado, I'm going to invite our next speaker, and that is Phyllis Kemani. Phyllis Kemani is the Chief Retail Officer in Family Bank, and she oversees the whole of the retail function as well as the SME segments in the bank. Now, Phyllis at an individual level is a wife, and I might want to mention to one husband. She's a doting mother to 3. She's a gourmet cook as and when she's at home. So you'd want to get invited by Phyllis to her place. Phyllis loves to travel, and specifically to luxury destinations. She's not the kind of person who wants to go backpacking and camping out in the wild. She loves luxury travel. Phyllis also loves to listen to podcasts. It's her way of growing herself, and especially leadership-related topics. So Phyllis holds a bachelor's degree in education with a major in mathematics and economics, and is currently pursuing a master's degree in business administration, and that's specifically in strategic management. So she's a graduate of the Advanced Management Program. Now listen to these schools: from Strathmore Business School, from CEIBS Business School in Accra, Ghana, from IESE Business School in Barcelona, Spain. She is also a certified executive leadership coach accredited by the International Coaching Federation, that's ICF, through CDI Africa. So Phyllis is a seasoned financial and business expert with over 18 years of experience specializing in operations and business strategy. In the banking sector, Phyllis is renowned for transformative leadership, capacity building, SME, and relationship management. She is passionate about mentoring emerging leaders, and she's also dedicated to creating lasting and sustainable impact in the water, sanitation, and hygiene, that is WASH, as well as agri-SME sectors. So let's put our hands together and welcome Phyllis Kemani, who is our next speaker. You can use the digital claps on your screens. Karibu sana, Phyllis, over to you.
Thank you so much, Joyce, and good morning to everybody. Good morning to the panelists. Good morning to our customers, and it's our pleasure. It's such an introduction, makes you feel small and feel humbled. And for me this morning, I want to welcome you to this session today. As Joyce have said, as we celebrate our Customer Service Week, And as you all know, again, we are celebrating our 40th birthday. And you know, when you're 40 years, you are starting life. So for us as Family Bank, as we celebrate 40 years this month, we are also starting life. And we say as Family Bank, we've grown a strong retail customer-based portfolio, which we have a key focus on the MSME segment, who forms 80% of the businesses in Kenya, as we all know, and majority is where majority of us sit. And as Family Bank, we offer a diverse range of products tailored to meet the varying and evolving needs of our customers. And we all know that the needs are ever changing. So you'll find our products, we revamp them every year because the needs are ever changing. And you say all our products are tailor-made, they are innovated and affordable, just to make them accessible to all of us. We have various propositions that we offer within the bank, and for me, I'll just touch a few that mainly sit within the MSME segment. And to start with is the accounts that we offer, where we have the current accounts, we have the savings account, we have fixed and call deposit accounts. We still have interest earning current accounts, which are more transactional and operational. But if you're able to have a minimum balance of a certain amount, then you're able to offer you a very, very exciting interest rate. We have accounts for our children, whether they are scholars, whether they are the junior members. We have Chama accounts, and we still have the Premier accounts. These are the accounts that we call them the Fuzu Premier account, where you're able to get a specialized relationship manager who is able to work with you. We also have a number of collection and payment solutions that we offer to our customer, whether you are within the retail and or whether you are in business, whether we are able to offer you efficient collection solution through platforms like the dedicated pay bills, that is the M-Pesa pay bills. We also have PDQs that are quite affordable. For people who are cash heavy, we are able to offer cash in transit services, the mobile applications, the USSD collection platforms, just to ensure that we've gone digital and the world has evolved and majority of the people don't carry cash. So any payment that these days is being made is either through using cards or using mobile, just giving you the platform to ensure that you're able to do all these collections. The cycle cannot be complete until you're able to give the payment solutions, where we are saying you don't need to go to the bank for you to make a withdrawal, you don't need to walk to the bank for you to be able even to do an RTGS of any payment. So we are offering our payment solution, which we dub Family Pay, where we facilitate efficient and convenient payment to your business or at an individual level. That means you log in your phone, you log in your laptop, you log in in your iPad, and then whether it's salaries you're paying, whether you're doing an RTGS, you're able to do it at the comfort of your home or your office. In addition, we also have a majority number of cards, especially our prepaid card, that is the digital transactions. And our prepaid cards are in a number of modules. We have the one for the students, but you also have a multi-currency card that you can able to put your dollars in, you can put your euros in, you can put your Kenya shillings. So if you're traveling and you don't want to make transactions that hit your account directly, then you're able to load your prepaid account, whether with dollars or euros, especially for the people who like traveling. We also have a number of products, especially the trade finance product, where we offer a wide range of affordable, friendly, and cost-effective solutions that aim at supporting people in all sectors, all economic sectors for us to be able to grow. It starts from the bid bonds, the bank guarantees, the post-import duty financing, all guarantees and all solutions, LPOs, LSOs, LCs. If you are a contractor, you're handling something or you're importing something from outside, then this is the bank that you all need to know. And the benefits range from guaranteeing smooth, secure transactions, readily available capital, customized solutions, amongst other benefits. We also have asset finance products where you either want to purchase a vehicle, you want to purchase a machinery. And for us, we say we understand that access to rightful financial solutions is key for your business to be able to grow. And that is why under the asset finance product, we look to empower the businesses by offering financial flexibility that you require for you to acquire your assets. We offer 100% financing for brand new vehicles up to 7 years. And for us, we do a maximum 24 to 48 hours approval. Zero processing fee for all asset finance facilities, whether they are insurance, premium financing. And what I would wish to say is, depending on the sector that you are in, we are offering from the range of 80% all the way to 100%, especially when it comes to the education sector, which is very key to us. We have a number of products we offer. Once I said the asset finance 100%, we also do Inua Shule. Inua Shule is a product that offers to anybody who owns a school, whether private or public, and you want to either renovate, you want to do a lab, you want to do a new constructions, we give up to a maximum of 4 years, 100%. We have a bridging facility that is unique to Family Bank only, that where we are able to give to our schools when they close. Maybe you want to pay your employees, maybe you want to do a certain renovation within the school holidays. We call it a bridging facility where you are able to repay within 1 year. Some of them you are able to repay when the school reopens. We offer collection accounts where we are able to integrate with our systems, and it is easy for you to be able to do reconciliations. Again, we also have the wash product. To say it's very close to my heart, anything touching on water, sanitation, and health. And we still bundle this product within the agriculture and also the school side. And it's our commitment to sustainable development. And we have our dedicated loan product under water, sanitation, and health, which we dub MagiPlus, where we provide financial solutions to whether it's an individual, whether it's a micro business, whether it's an SME, whether they are public water utility companies or other water service providers. And we target to address the 995 billion financial gap that exists within Kenya for universal access to water by 2030. And with up to 80% financing, whether we are able to give you all this product that range from rainwater harvesting, water shortages, borehole drilling, commercial biogas plants, improvement of your sewerage and reticulation systems, whether you want to do solar, whether you want to do water tanks, all this happens within the wash and sanitation. We have a number of partners that are with us, especially water.org. We have Aqua4All that are able to partner for us to ensure that our dream, to ensure that we do sustainable development happens. We still have one of our products that is celebrating 1 year old on 22nd of September, which we call the Queen Banking or Women Banking. And as Family Bank, we say we are dedicated and we are committed to transform the financial landscape for women in Kenya through access to affordable funding. The beauty is we understand the unique challenges faced by women, and through our women-focused product, that is Queen Banking, we seek to empower, we seek to grow, we seek to educate from all walks of life, helping to build their financial resilience and also grow their business sustainably. Through Women Banking, we are able to offer both financial and non-financial offering. When it comes to the non-financial, we do a peer-to-peer learning through the webinars that we do, and also through the networking sessions that we arrange. We also do financial fitness sessions. We do insure and protect through a Bima bundle product, where you're able to pay an affordable monthly payments, where we are able to bundle the personal accident cover, you're able to bundle the life. So it's one product, it's many products in one, specifically for women. And again, we are also able to offer unsecured facilities up to 7 million for women and give them an asset finance up to 95% with different ranges from 60 months all the way. We also have Chama savings account, not only for women, but because we know women also move in squads. So there are a number of Chamas that we offer, we have a unique for them. We also have term deposits, we do mentorship, we also do coaching opportunities amongst other valuable benefits. As you heard, I'm a certified coach, so it's one of the things that I also offer to our women in terms of coaching as a pro bono. The other bit, we also have our agricultural financing, and this touches across the agricultural sector, which we all understand is the backbone of Kenyan economy. And through where our daily financing, we have Kilimo Biashara, we have steer fattening for people who are within the sectors whereby they want to buy young calves or they want to buy bulls, and then they're able to fatten within a period and sell. But for us, we say we offer the products that enable, whether you are a small scale holder, whether you are an agri-business, whether you are dealing with any product that is related to agri, or cooperatives that you want to grow and thrive. And through these products, then the farmers or the business people are able to enjoy the benefit and convenience of the repayment periods that we offer, because they more or less touch the period, they much more or less touch the crop cycles, and the quick disbursements of capital and access to training, especially where we are having a number of partners with us, although also through the Ministry of Agriculture. We have ASELI, we have Palladium, a number of partners that work with us. And finally, I want to say we're also strong within the retail banking, and I said before, which more or less touch the personal banking. And personal banking, these are people who are not in business, but more or less they are either employed, and we have a number of products for them. We have check-off products that you're going all the way to 132 months with a very affordable interest. As you know, right now the rates have really gone high. We are also offering above that, you're able to access a salary loan of up to 300,000 for a period of 24 months. And again, above that, you're able to get a salary advance of 50% of your net pay. So it means you can be able to enjoy over 3 products with us. We also have a mobile facility, which we dub the M loan, which is basically you get to your phone and then you're able to access. The beauty is, under the personal banking, other than the checkoff, all the other products are accessible through the phone. So you do your salary advance of 50% through the phone. You do your salary loan of 300 up to 24 months over the phone, just to ensure it's affordable. And the beauty is you are able just to give you a limit, and then you can be able, and then you can be able to access that amount of money in a short period. And for me, I want to give a commitment as a bank and say, above and beyond, we want to do above and beyond what we call our best. As you know, we've really won a number of awards for being customer responsiveness and customer experience, but we want to go above and beyond that, just to ensure you're comfortable. I take care of the Family Bank branches, and my commitment is in any branch you visit, I promise you'll get the best service. You are a family and you're part of this Family Bank family, which we call a Fuzu family. And we say, as you're part of our customers, even for those who are not our customers, our call and my call to action is one. And I wish to say, we invite all of you, whether you are customers or not, to take advantage of our diverse and innovative products. And whether you are a business owner, you're a professional, you are in a savings group, we can avail affordable funding, mentorship, network, coaching opportunities to help you grow and sustain your financial success. Thank you so much, and God bless you.
Thank you very much. Phyllis, we no doubt feel that from all angles, depending on any financial needs that we may have, whether we are in business, whatsoever kind of value chain the business may be, whether we have unique challenges when it comes to meeting our own personal financial needs, we are covered. And so by all means, reach out to the team and they'll be able to have those conversations with you. Now, at some point, you need to understand on what basis are you making those financial decisions when you decide you're asking for whatsoever kind of support, financial support. As a business person, what is your money mindset as you are making your money in the business? What are the challenges that you are facing as you are running your business? And to be able to help you answer that is Thomas Warira, the co-founder and principal partner of Probity Consult Limited, an accountancy consultancy organization that helps to support you as a business person when it comes to accounting and financial needs. You can outsource your accounting services, accounting systems, automation, so that you as a business person are able to maintain proper records and are able to use your financial information to make sound business decisions. Thomas guides entrepreneurs like yourselves who are here to understand the finance needs of your business, assisting you in creating accounting processes that give you the ultimate and accurate data for compliance and decision making, because we know it's all about data that will make our business decisions. Most welcome, Thomas.
Thank you, Njeri. Much appreciated. And thank you, everyone, for joining us here today. I will walk you through the segment on financial management. And we're going to learn some things today and just grow in this journey as we walk together in this. So again, appreciation also to Family Bank and Wild International for facilitating this for us. As you heard, my name is Thomas Warira. I represent an organization called Probity Consult, which is a part of the Sandbox. And we were founded in 2013, and we offer services to SMEs, NGOs, and the corporate sectors, working at being partners with our clients so that we can assist them achieve business goals. We offer outsourced accounting services, automation, financial management, payroll administration and automation, statutory tax compliance, budgeting, forecasting, the whole financial management portfolio of it. And we, like I said, are the accounting and financial management experts at the Sandbox. So today we are going to be looking at financial management. And I always like starting with a definition of what financial management is. And we say that financial management is strategic planning. And here, the word strategic, I'd like to underline that because that talks about intentionality, being intentional. So it is about intentional planning, organizing, directing, and controlling the economic activities of the business to best manage the business resources. We say this involves making decisions about how to acquire, how to allocate, how to utilize financial resources to achieve an entity's best deserved, best wanted goals. So it's important that then we run this process of financial management in our businesses because it's about managing the resources that we have. And like we know, resources are limited. There are no organizations that will have unlimited resources. We all have and operate in an environment of limited resources, and we want to achieve what is our preset objectives, ensure that we are profitable and we maintain long-term stability. So let's dive a little deeper and then look at what financial management for our businesses is all about. So financial management will include the following key aspects. So one is planning and forecasting. So here we talk about setting financial goals. We talk about creating budgets and forecasting future financial performance. So it is very important that for our businesses, we get into a system and a process of being able to set out where this business is moving to, rather than just managing on a crisis basis, on a daily basis. So we need to set our goals. And once we've set those goals, then we need to turn them into financial terms by creating budgets and then forecasting future financial performance so that we have targets that then we can work towards. Then after that, we also say we want to look at financing decisions. And I think this comes in very well with the kind of partner we have today, Family Bank. So we need as a business to choose what is our optimal mix of funding. And this is between debt and equity, because these are the two general forms of funding that come into any form of business, debt and equity. So we need to see what is the optimal mix of this. And then we go ahead and we manage our relationships with those that will either lend us or invest in us, other financial stakeholders. And this would be, say, from a debt perspective. Because the owners of the business will be the equity stakeholders in that business. So we make those financing decisions and we choose the optimal mix of debt and equity. And then we also choose the people we want to partner with or the organizations we want to partner with in these decisions around financing our businesses. Then financial management also will include cash flow management. And this is where you want to ensure that in your business, you're able to meet the obligations that come in, both short-term obligations and long-term obligations. You want to manage the day-to-day operations. You want to take advantage of growth opportunities that are coming your way. You don't want to be cash strapped. You don't want always to be in a crisis position in the business. So you want to incorporate financial management practices that will help you manage the cash that comes into your business and goes out of your business to ensure that you remain what we call cash positive. In other words, that you have the cash to meet the obligations as and when they are falling due. Then we also talk about profit management. So in the process of financial management, one of the things you do, we talked about creating budgets, setting forecasts for future performance, financial performance. Then we want to track our income. We want to track our expenses. And this is done so that we are able to maximize profits and ensure that the costs are well managed. You do not want to run a business where your costs run away, where your costs are out of control, or your costs are not well anticipated and prepared for. You do not want to be a cash-strapped business. So it is important to track income and expenses. And by doing this, then you're able, through the financial management process, you're able to maximize profits because you have a target that you're working towards. You're ensuring that the inflows that need to come in are coming in, and this would be where your receivables or your debtors are paying on time, they're being tracked, you're engaging with them well to ensure that this then happens, right? And then in this process of financial management, we also talk about risk management. And in risk management, we are looking at identifying, assessing, and mitigating financial risks through insurance. This is one of them. And we had this talked about. Some of the products that Family Bank offers include insurance premium financing. So we identify what are those risks that we have in our businesses. And these are risks that then we can't eliminate them, but we can mitigate them. And some of the ways that we mitigate these risks is through proper insurance. Secondly is diversification. If your business has one income stream, you have one line of business, the question is, what are the risks that underlie and are around that? So financial management will help you assess that, identify that, and quantify what that risk would be in the event of certain scenarios taking place, which could be environmental, they could be political, they could be regulatory or legal, they could come in any form or any shape to our businesses. And once then we identify what this risk would be, then we take the appropriate mitigating factors and diversification of our revenue streams or our supplier base. Diversification of our customer base would actually be some of the things that we look at here. We also do alternative planning, where you've already done your strategic plan, you have your budgets, you have your forecasts, and all these things are in place. But then because of these changes that are coming in the economy that are beyond your control, then it means you need to go back to the drawing board and make certain alternative plans. So when we look at this subject of financial management, it is so critical to every business we run, regardless of size, because many times business people actually think that their business is too small for planning. No, as long as it is a business, as long as you have invested money in it, money has gone in, as long as you're putting in time or you've employed somebody to put time into it, then you need to engage the practices of financial management to plan and to forecast, then to make those financial decisions around the financing of the business, to engage in cash flow management so that your business can remain cash positive in that. Then you track your profit, you manage your profit. You don't just wait for it to happen. You actually track it and ensure that it happens in the way that you anticipate so that you take corrective action where it's not happening. And then key also is managing risks. So you identify the risks, you assess them, and then you take mitigating actions around that. So those are really the key aspects of financial management. And now I'd like us to just delve a little deeper into what are those practical things that as a business we need to do in order to employ financial management in our businesses. One of the other things we also need to look at under the financial management process is compliance and reporting, ensuring that financial records are accurate. And we cannot underscore this more than this. Your financial records must be accurate. They must be complete. They must be timely. They must be compliant with tax laws and regulations. And when you're reporting to stakeholders, they will require accurate and compliant reports that come from you from a financial perspective. So it is important that we keep our company's records in a way that is not only satisfactory or convenient for our business, but we ensure that they actually do meet the regulations or the requirements of the law and also our partners. And this case would be even like the bank. When you actually go into the bank, and you need a facility, some of the documents they require will be financial statements. So if they are accurate, they comply with tax to the expected goal of your funding or your financing in that. So what is this financial management process? What are some of those things that we can do to be able to engage in this process practically in our businesses? What are those things that we can engage in? And so we say the first thing that we do under the financial management process is plan. We plan and we budget. So in planning and budgeting for our businesses, we set financial goals. And these financial goals that we set, or these budgets that we set, we then split them up into different periods. So first, you need to set a financial plan or a budget for your business for the current financial year. So if your business year runs from January to December, you need to start that year, begin that year with a plan for that year. But then that plan into a 3-year, a medium time frame, and then you push it out to 5 years, and then you have a plan, and you can then have a picture or a wider angle picture of what your business should look like or what you would like it to look like. And then you start working now towards that goal. So plans and budgets help us not only dream or forecast or see where we want our businesses to go, but they help keep us in check, because when we actually have done our actuals, then we'll come back and compare. So once you have those plans set out, you create your budgets, and these budgets are then split into two. You have operational budgets, which will then be looking at what are your incomes for the week, for the month, for the quarter, for the year. So you do that, and also for your expenses. So those are operational budgets. These look into our incomes and our expenses. And then we also create what we call a capital budget. And capital budget now looks at the cost of the assets we would like to invest in our business for it to be able to achieve what we want to achieve. This could be items to do with computers for use in the office. This could be furniture and fittings. This could be vehicles. This could be property. It could be all different. It could be plant and equipment. It could be all sorts of different capital investments to just help the business grow and move along the plan that has been slated for it. Now, when you have a budget and you have a plan like this, it is easy also for you then as a business to engage your financial partner early enough and say, this is what we are looking at. This is where we want to go as a business. Can you partner with us for the next few years to help us achieve this? And they'll come in and they will be able then also to support that plan and to be able to work with you and partner with you in that plan to help you be able to achieve that. And once the plans are out and you have them, then the business is now running on a daily basis, and you're collecting actual data on an everyday basis. You're recording those transactions. You're maintaining books of account on an everyday basis. You're doing analysis of this. So at the close of periods, and for different things like for sales, you actually then need to do your actual versus budget comparison on a weekly basis. And then on a monthly basis, then you can look at the performance of the business. You can be looking at your profit and loss account. You can be looking at your balance sheet. You can be looking at cash flow, both on a weekly and a monthly basis. So it just becomes, the financial management process then becomes a daily routine thing that's done by the business. And if you employ that, then your business will just be poised for success and not for chaos. So the other thing we talk about in this financial management process is maintaining records. And records are important. Every business needs to record all transactions. This includes sales transactions, this includes expenses, incomes, payments, and debts. Now, both owed and owing. Now, when we talk about sales and incomes, now the two are very different. When we talk about expenses and payments, again, from an accounting perspective, these are different because sales relates to whatever transactions have gone out, whether they were cash sales or they were credit sales. So whether there's an income that has come in immediately when the sale is done or not, the sale must be recorded. For expenses, these are whatever expenses or costs the business has incurred, whether the business has paid them out or is yet to pay them out. So sales and expenses actually go beyond incomes and payments. Incomes and payments relate just to cash that is coming in and going out. So we need to look at all this. We need to look at our sales, our expenses, our incomes, our payments, our debts, both what the organization is owed and what it is owing. And this, we talk about our customers who are our debtors. We talk about our suppliers who are then our creditors, and we maintain good records where we are able to track so that we are able then to collect on time and do whatever we need to do, meet our obligations as a business as and when we need to meet those obligations. So the third thing then we can do to be able to engage this financial management process in our business on an ongoing process is to use the operations budget to track expected cash in and then plan adequately for any gaps or shortfalls. Now, there's an adage that says that cash is king. When your business gets cash strapped, then many things could potentially go wrong. Because one of the things that could happen is you could have certain suppliers choosing not to operate with your business. You could have you could be unable to supply your customers on time. You can be unable to pay your staff on time and many other things. Maybe you have obligations with the bank and then you're not able to actually meet these obligations as and when they are falling due. So it is very important to have your operations budget that will track your cash that is expected in and out. And so where you see there are gaps, there are shortfalls, then you can quickly come in and make what are those decisions. Is it additional effort in collecting receivables that needs to happen? Or do we then need to walk to our financial partner? Do we need to walk into Family Bank and then have this conversation about can we have some facility, some form of product that can be able to help us bridge this? Either it's a short-term facility like an overdraft, or it could be a loan or some other form of financing that can then help you meet that. But also, this kind of a budget helps you where you may have some cash surpluses or excesses coming in. You may have exceeded your sales targets for the month or for the period, and therefore you have cash that has come into the business that was more than was anticipated. Then again, here you have an opportunity to come up and make a plan for what this excess is. Where do we invest it? How do we get the best out of it? Do we invest in more stock? Do we invest in marketing or advertising for our business? Do we make payments on facilities that we have? What do we do with these excess surpluses? So an operational budget is very key in helping every business track cash that comes in and cash that goes out, and then just help manage the shortfalls or the excesses that come in the best way possible for the business. Then we talk about generating financial reports. And I'm so passionate about this in business because financial reports or financial records really is the way that a business speaks back to its managers and to its owners. Many people, I find many businesses grappling with how do we understand what we need to do? What should we do in certain places? How do we do the other? And this other, what do we put in this business? And many times I tell them, go back to your financial reports, go back to your profit and loss account, go back to your balance sheet statement, go back to the analysis of transactions in your business, because this is how the business speaks back to its owners. So it's very important, first of all, before you even have these reports, to be able to record transactions correctly and accurately and in a timely manner. So every transaction for your business, first of all, must be recorded. Two, it must be supported with a document. So whatever transaction is happening, ensure there's an invoice, there is a receipt, there is a petty cash voucher, whatever support documentation that needs to be there, ensure that it comes in for that transaction. Then have those records well recorded and then analyzed. And in today's era, we have a lot of softwares that are available to help our businesses do this. They are simplified accounting softwares, they are simplified expense and income tracking apps and softwares that have, and are then in the market. Some of them are free, some of them are subscription-based, but affordable, and you can just establish one that works for you and works for your business, but ensure that transactions are being recorded on an ongoing basis, on an everyday basis. As transactions happen, it's happening. Sometimes businesses want to do their recording of transactions at the close of the week, at the close of the month. We have seen a number of this, and what usually happens is transactions get left out, because not everything gets remembered, especially if transactions have not been supported with invoices, with receipts, with vouchers, and many other of those primary source documents that would support them. And when that then happens, then you find that there are gaps. Or secondly, you find that the people working within the business, or even the business owners, do not remember what some money was spent for. So you have money went out of the business, but then because we've given time, we did not record immediately, we do not remember. So even if we record that money that went out, that expense, we may not record it accurately. So then it means when we analyze our financial statements, they may not be too accurate, they may not be correct. So it is important that firstly, we record our transactions on an ongoing basis. We do it accurately. We ensure they are supported by primary documentation, which is your invoices, your receipts, your vouchers, so that if we need to query anything later, we will come back to that. And then if then you have now your accountant within the business, or if then you have the knowledge of putting those records in the form of a profit and loss account and a balance sheet, then you can go ahead and do that. And this statement will then basically give you a lot of information on how the business is performing. Technically, the business will be speaking back to you. Now, you will use these statements to go back and compare to the plans that you had made at the beginning when we said set financial goals. And you'll be able to see for this month, what was our performance against what we had planned to do? Are we achieving the targets that we have set out to do? So the profit and loss account will tell you about the financial health of the activities of the business. The balance sheet statement will be able to tell you about the cash health of the business. How is the business doing when we look at the assets that we have employed into the business against the liabilities, what the business owes out? How is that looking at? It will help us tell us about cash flow. Are we in a good place from a cash perspective? Is the business able to meet its obligations in the short run? And even in the long term, are we able to meet those obligations? Well, the profit and loss account will show us how much surplus or profit the business is making. And that from that, we will be able then to assess with this kind of level of profit, is this business able to invest into the growth that it expects to achieve in the forthcoming period? Or is it able to finance a part of it? And then do we speak to our financial partners to come in and then help us achieve that goal? And if we go to our financial partners and go for a facility, are we able to make the repayment? Are we able to meet the regular commitment, be it monthly or be it whatever period? So financial reports will really, really, really help us understand where we need to be in our businesses and what our businesses are basically doing and saying to us. And then we also in the financial management process, we need to understand our tax obligations and how to meet them. Now, for a lot of Kenyan businesses, and especially SMBs, tax is been a pain for a lot of them, and a lot of it because we do not understand obligations, what our tax obligations are as a business and when they fall due. So it's very important that you obtain whatever expert help that you need in understanding what your obligations are for as a business, and then in how to file and submit accurate tax returns. It is very critical. One of the places and a start point I usually tell a lot of business owners, the start point of knowing your tax obligations is by looking at your PIN certificate for the business. Every business registered has a PIN certificate. And even as a sole proprietor, the business uses the PIN certificate of the owner. In that PIN certificate, at the last entry of it is the tax obligations of that individual or that business. That is the first place to look at. And when you understand what those obligations are, then gain understanding on how to meet those obligations accurately and in a timely manner. The other thing you also need to do is speak to a tax expert, then who will help you also understand what are the tax implications for my business or my industry. Because you could be subject to a certain tax obligation, but you're not registered for it, so it does not show up on your PIN. So it's important to understand what those tax obligations are and then work towards being able to meet them. Filing accurate and timely tax returns is very possible and is necessary for every business. When you go to meet with your financial partner and you're able then to actually demonstrate that your business is tax compliant, it becomes much easier for them to deal with you because you already meet some of the compliance checks that they have as they do that. At this point, I think I'd like us to interact a bit more. I'd like to invite Lucy to actually help us with that.
Thank you. Thank you very much, Thomas. I am hoping we have been taking notes because like every good teacher, there is a question that comes. So I'd like to post this question and to see if we have just gotten what we are having the conversation about. So now our question, and I'm hoping that we all can see the poll right there. What are some strategies of separating business and personal finances? Let us see your responses. Is it to run separate accounts? Is it to have the business pay the owner a salary? Is it to record all business expenses? Let us see. We have received a lot of tips on how to manage our finances. It's important that we're aware of the risks in our businesses. It is important that we understand the cash flow management system of our business. It is important to be compliant with not just the tax regulations as a whole of the country where your business is in, but also of the industry that you are in. It is important that you are able to track the money that is coming in, the profits of your business. So the question that we have here is, what are some strategies of separating business and personal finances? Those who are saying we pay the business owner first have reduced the number. And we are about 236, 37 of us. Congratulations and thank you for being here. But seeing the people who are answering us, they are only 79. Where are the rest of us? Let us engage. Good. Keep the numbers up. We are at 82. Can we have the 238 of us responding? What is it we need to know or do when it comes to business and personal finance? And if there's anybody who's not able to see the poll question, kindly do let us know. Keep the numbers up. We are at 100. Can we get to 200 mark? These are some good nuggets for us to be able to keep in mind. We only say you stop learning when you have rested. So whereas some may know this knowledge, maybe you have not been doing it fully, maybe you've not been doing it diligently. So it is important to always have a reminder. Yes, 110 of us, we need the 200 of you to respond to us before the poll question is removed. What are some strategies of separating business and personal finances? Please do answer us on the poll, not on the chat. If you're not able to see the poll, please let us know. And counting down to the end of the poll, can we get the 100 of us who are yet to respond? Do you want to there is the poll. We are coming to the end. Who is yet to respond to us? Almost 250. Again, I say thank you very much for being here, but it only seems like almost only half of us. So, Thomas, help us understand this question. What was the expected correct answer? And are you able to see the poll, Thomas?
Yes, I'm able to see the poll. And
Let me share the results. Okay, go ahead.
Technically, all the answers are correct. However, they carry different weighting. And for most businesses, the first running separate bank accounts, as where we had the biggest number of people calling to, is very correct. Because by running separate accounts, that's a very easy way of just separating between the finances of the business and what is the finances of the owner. However, recording all business transactions is very important, because then you're able to separate what expenses actually belong to the business and what actually then are personal. And those then already should be met from the accounts of the owners and that. So that is very important. The third answer of have the business pay the owner a salary, again, that is usually what I call an Achilles heel of small businesses, where the owners end up not paying themselves, not being paid by the business. And as a result, they are always dipping into the coffers of the business or into the bank account of the business. It's paying their personal expenses, and then it becomes very difficult to do that. Now, not separating business and personal is a poor financial management practice. And these are some of the ways in which, if you find that there are areas in your business that you're not able to do that, you can employ and can help you then be able to have your business stand independently. You can be able to look at the accounting records, the financial records of the business, and they actually do represent the business. They do not have interference of any personal nature. Jerry.
Super, great. You do have some more points and nuggets to give us. We give you additional time. Over to you.
Yes. Let's go ahead, and we talked about understanding tax obligations and how to meet them. I would like us to just look at what that means from a tax perspective. What are some of those tax obligations then that businesses face and need to meet at certain times? So one of the big and key ones is corporation tax. And loosely, we also call it income tax. And income tax is a compound name or a family name for a number of taxes. One of them being corporation tax, which is a tax that we pay on the profit of the business at the end of the year. However, this needs to be paid on an installment basis at the end of every quarter. So your accountant or tax advisor needs to help you how to calculate this on a quarterly basis. And then there are certain dates, the 4th, by the 20th day of the 4th month, the 6th month, the 9th, and the 12th month of your financial year. So you count those months based on when your financial year starts, and then you pay your corporation tax or your income tax in installments as the year goes by. Now, that is one way of complying. The other tax that businesses will go through is turnover tax. Some businesses have been registered for turnover tax. And for turnover tax, it is due by the 20th day of the following month. So it is very important to note that if your business is registered for this as a business owner, have that in your calendar and know that by the 20th day of the following month, we need to file this and submit it. Withholding tax, which is a tax that we actually pay, we withhold or we deduct from payments we make to our suppliers of services, and mainly professional consultancy and marketing services. This we actually need to pay by the 5th day from the day that we pay our supplier or vendor. Pay as you earn, very common tax in as far as business is concerned. It is not a tax on the business, but it is a tax that is levied on salaries paid to employees of the business. This is due to be paid by the 9th day of the following month. Advance tax. Advance tax is a tax that is actually paid by operators of commercial vehicles. And these could be vehicles that are either goods carrying or passenger carrying vehicles. Now, this advance tax is calculated on the basis of either of carrying capacity, which would be a load capacity in tonnage for a vehicle, goods carrying vehicle, or number of passenger capacity for passenger carrying vehicles. This is due by the 20th of January every year. Now, advance tax is then anything paid in advance tax will then be deducted from the final tax the business is paying on its profits at the end of the year. Then we have rental income tax, because as individuals, a number of us have some property that we have invested in, and we actually then come in and we collect some rent. So if you own a residential property as an individual or even as a business, and you rent it out, and every month or quarter you are receiving some rental income, then as long as that rental income is 24,000 shillings and above every month, then you need to pay monthly rental income on it, and it is due by the 20th day of the following month. We have value-added tax, and this is for businesses that both deal with goods or services and have a turnover threshold of 5 million shillings and above in a year, and are not necessarily in the agriculture sector or medical or educational sector, because some of those services are exempted from VAT. VAT is due by the 20th day of the following month. And then we have import duty, which then is due on the clearance of goods. So once goods have been imported, as they are being cleared, then import duty falls due. And then we have capital gains tax, which is a tax that is levied on any profit that is made on the sale of capital assets or real estate. And this is due at the earlier of 2 dates. One, when the seller receives the full purchase price, or when the transfer of the asset is made in favor of whoever is buying it, the purchaser. Whichever of those 2 dates falls first determines when capital gains tax falls due. So these are some of the taxes that businesses, Kenyan businesses, will come across on a regular basis or on a one-off basis, depending on what they do. And it is important then, as business owners and managers, that we understand these dates. We have them, and then we ensure, one, we comply with the dates, because missing the dates brings in penalties and non-compliance, but also is expensive and will then generate probably some interest and some penalties on the tax that was late. But then meeting them gives us a good record, not only with the regulatory authorities, but also with our financial partners. So I want us to shift gears a little and look at one more area, which I think is a big question we always get as accountants and in the area of financial management for business. And the question is, how does a business pay its owners? You own a business, you run a business. So how should this business pay me? Because for a lot of small businesses, we find that owners don't get paid. Staff get paid. Whoever else is working, the suppliers get paid, everybody else gets paid, but the owner never gets paid. So you find people who have run a business and have worked so hard for so long, but at the end of the day, they get either the short end of the stick or they worked so hard for everybody else and they don't get it. So the first way in which a business can pay its owners is one, a salary. And this is where we assume or we say the business owner becomes an employee of the business. So they work in the business. So, and many business owners actually do work in their businesses. So it is important that they become part of the payroll of the company and that the company or the business then pays them a monthly salary. Now, this salary is subject to pay-as-you-earn, a tax to that. And so for business owners, please remember, even as you plan out, as you do your plans for compensation and remuneration on how you're going to be compensated by your business, salary is subject to pay as you earn. And at the higher bands, the higher the salary then you earn from the business, the higher the tax is, because the highest salary tax band we have on salaries is 35%. So anything that any business owner earns that is 800,000 shillings and above per month will be taxed at a rate of 35%. But salary is one of the ways in which business can compensate its owner. It is one of the ways of helping business owners separate personal and business finances, because then with the salary, then you're able to handle your personal financial matters separately and out of the business. And then it makes planning for the business become much easier and much better. A second way in which a business can pay its owners is through benefits. And there are various benefits that businesses may provide to business owners, and there's no limit to them. However, these different benefits then have a different tax implication on them. And there are various benefits, such as giving the business owner a phone, an airtime, a computer to use, an internet connection, a business vehicle, fueling their vehicle as they move around doing business matters, housing benefit where either the business can rent out a house for its owner, or they can actually own a house and house the owner in there. Those are some of the kind of benefits that would have. Now, different benefits have different tax implications because even if they are not cash related, there's a way the Income Tax Act is able then to come up with a financial element to them and then determine what is the value of this benefit and how do we tax it. There are a few benefits that again have preference or are held differently by the Income Tax Act. Things like a medical benefit, which then if the business offers to its employees or to its owner, that benefit then is not taxed on whoever the beneficiary is. And then the business is also able to claim that as an expense and therefore reduce its own tax on it. So that is one benefit that in one of the ways in which a business can pay its owner by providing a medical benefit, a medical cover for them. Paying school fees for their dependents is another of those benefits where if a business does that for its business owner, then there will be no tax on the business owner. However, for that benefit, then the tax will be levied on the business itself. So again, with some good tax guidance, you're able to see how and where to do that. So most of these benefits are subject to pay or some form of tax, but there are some like medical, which are pretty good benefits that then do not attract tax on both the beneficiary and or the organization itself. And then another way which business owners can be paid by their business is through dividends. And at the close of the period, when the business has done well, you have worked hard, and the business has actually made money, you have paid your taxes, and then you have a surplus, part of that surplus then can be paid off to business owners in the form of dividend. Now, we usually say that salary and benefits are what a business can pay its owner or pays its owners for working in the company. Now, dividends is what a business pays its owners for working on the business, or working not in the business, but working on the business, or working for the business, towards the business. So this is a bigger picture. So when the business has been profitable, one of the ways that you can then, as a business owner, manage taxation and manage being paid is by being paid a dividend, because dividends attract a lower tax rate than pay as you earn. So they are actually get taxed at a lower rate than than salaries are. However, businesses are only paid from profits that the business has made. So you have to make the business profitable, and then you can enjoy. It can actually pay you in the form of dividends. And one other way in which a business can then pay its owners is through issuing additional shares to them, giving them a larger stake in the business. As the business grows, then one of the ways it can reward its owners is new additional shares. And this is a very good strategy, especially where the strategic plan that you've made as a business is to actually grow this business, is for expansion, is for growth. So the idea here is not to take money out of the business, but whatever profits we are making, we actually want to reinvest them in the business. But at the same time as we reinvest them, we want to reward our owners for the good work they have done, for the resilience, the time they've taken, and whatever they've done towards this business, the guidance, the leadership they have actually shown. We actually reward them with additional shares in the business, so they own a bigger stake of this bigger business as it was in then. So these are some of the ways a business can pay its owners. And it is through these payments that happen, then these owners can go in and then now start managing their personal financials in them, their personal monies in there. Because if business owners are not paid, then they may not have anything to then manage from a personal financial perspective and all that. So at this point, Njeri, I'd like to let you in, and we can then get a bit more interactive at this point with our audience, and just get to learn a bit more from each other.
Super. Can we appreciate Thomas? Thank you very much. This is rich knowledge that you have given us, good reminders for what we've not been doing, good how do you say, challenges to do better in what we're doing, because there's always room for improvement. Now there is a Mentimeter that is supposed to come up. My colleagues, is it possible to prop it up right now as we prepare one for the next expert when it comes to investment, and also as you continue to write your questions specifically when it comes to financing your business? What you can be doing, Thomas, is just continue to have a look at the question and answer slot, so that you're able to figure out how you will condense those answers. All right, something is coming up. Kindly, please do scan that QR code and do answer us that question from our Family Bank. Either you can scan the QR code, or either you can go into the website of Mentimeter, menti.com, and enter that code. You will find a question and would like to see what is your answer to that question. Okay, anybody not able to do that? Scan the QR code or go into the website menti.com and put in the code and do answer us that question. And my team at the back, could you, when you have sufficient responses, do let us know. Kindly everybody, from the last question I saw only 110 of us were able to answer that question. Can we get as much engagement as possible? Because you never know. And that is all I'm gonna say. You never know. As much as possible, as fast as possible, can we get all the 243 of us being able to answer that question? Okay, log into menti.com and you will find the code there to fill it in. Please put the link, the online log, www.menti.com, and the code. There you go, there you go, there you go. There is the question. Can we get more players? 38, 9, 40. Good. We would like to see 200. 243 of us playing. Now we have about 200 of us. Keep doing it, keep doing it. Keep doing it, keep doing it. All right. Specific questions of Family Bank. Would someone from Family Bank be able to direct response to those questions so that we make sure, this being the customer service week, we are able to respond to as many customers' needs as much as possible. For we are in business to be able to solve the problems of the customer within the resources that we have, all right? Okay, let us have as many responses. 247, can we get many more responses? Can we get many more responses? Can we get many more players? For those who are asking for the code, there is the link and there is the code to enter. 53, we need to get 240. It is important that everybody does get an opportunity. Fair play, as we like to say. When it comes to money matters, don't leave money on the table. Don't miss an opportunity. But time is about to run out for this question. Is there another one coming up that we can bring it up so that we also do save time? Have we sufficiently played and answered this question? Can we get the next one? And if we are done, we go to the next. There you go. Time is running out. What is the question? In which year did Family Bank become a fully fledged bank? Let us see which of our dear, lovely clients know this. Okay. There you go. 17 of us have been able to answer the question correctly. Congratulations to the 17 of you. Okay. There we go. We have what, 60 of us? Do we have another question coming up? Let's get onto the platform. Who has not gotten into the platform? Can we play the next question? There you go. Which Family Bank branch was the first to be opened? We want the answers, the responses on the Mentimeter. We have already put for you how to be part of the engagement. That means go into menti.com and enter the code. There you go. The answers. The answer is Kiambu. 15 of you got the answer right. Congratulations. Thank you for being dear clients, dear customers who work with us, who understand and who are aware of what we are about. Asanteni sana. We now go to the next part of our session and the next expert. So now we have the money. Is that so? We've got the money. So what do we do with it? And to let us know what to do with it is Kenon Bai, the co-founder of Mwalimu Biashara Limited, a seasoned finance professional whose expertise is in finance leadership, strategy process, and wealth management. With over 20 years experience in ICT, hospitality, financial services, he has made significant contributions in supporting organizations enhance their profitability, improve efficiency, and optimize stakeholder returns. We've just heard that it is important for the owners of the business to receive dividends. What do they do with that? What do you do with that? In addition to that, Kenon has extensive corporate experience in terms of personal finance and wealth management for corporates and individuals, and has thus founded a company to do the same. He's actively involved in the startup ecosystem as an angel investor, having invested in various startups, including ventures in food processing, ICT, and Y Combinator funded education startup. He serves as a business mentor through organizations such as Founders Boost and Integration Consulting Group. He is an MBA graduate from SBS and with an international module in IESA Business School. He has a Bachelor of Commerce degree, and he's professionally a fellow member of the Association of Chartered Certified Accountants, FCCA, and holds a Certified Information Systems Auditor qualification. Mr. Kenon Bai, welcome. Let us hear from you.
Wow. Thank you very much, Jerry, for that introduction. And to our host today, Family Bank, thank you so much for the opportunity to share today about personal finance and investments. While International, always a pleasure to partner with you in such endeavors. So yes, I'm going to take some moments to talk about personal finance and investment. But let me start by probably talking a little bit about ourselves. Mwalimu Biashara, you'll find as a company that was founded in 2015. The idea is we wanted to help entrepreneurs in their businesses. So we do a couple of things, as you'll see there, business planning, strategy formulation, as you can see. But our main focus area today is personal financial coaching. That's actually my passion. I enjoy doing that a lot, and we'll be focusing a lot on that. How do we do it? We help people make the right financial decisions. And how do we do that? We help you track your money behavior. And as you'll see as we continue talking, personal finance is about behavior more than the knowledge. But you get to see that we also have automated tools that help our clients get there. I'll be sharing some of that towards the end of the presentation. Looking at personal financial management, when you hear personal financial management, what is it? How does it look? How does it work? Now, there are many models out there, but we've adopted a model that talks about 3 steps. The first one being the ability to make the money. Before we manage this money, it's important to make the money. Thomas has laid a very good background there in terms of how do you actually get paid from your business. He's talked about various ways, and that's how you make your money. But after you make this money, it's important to grow the money. And I'll be talking about that, about investments. How do we actually get to grow this money? The last one is protect. It is one thing to make the money. You can grow the money, but you don't want to lose it. I'll be talking about what are some of the areas that you might be, you need to be aware of to see that you protect your money. So my entire presentation will be based on these 3 steps. I'll be asking us some questions here and there in the chat section for us to be able to engage. But let's start with the first one. We are here to make the money. most times when I am talking about personal financial management and I talk about making money, our minds go to investments and bonds and mashamba and all that. That is okay. But to get it right is to start with a money mindset. This question, money doesn't grow on trees. When I speak to different people, people have heard this statement from very many places. People say, I've heard it from my mom. I heard it from my teacher. I read it somewhere. And the influence this has on each of us could be different. One might have heard money doesn't grow on trees, and it empowers them. It's positive. It makes you work very hard. It makes you, wake up every morning and apply yourself and become very innovative. You see, in that case, that statement, he's setting a very good money mindset. Now, the same statement can have a negative money mindset on you. Think about, you try to, personally, I went to my mother and she only told me this, money does not grow on trees. And I can tell you, she was not happy with me. It seemed like I was asking for everything and not even caring about. Then she stopped and said, listen, money doesn't grow on trees. Now, a young boy, 11 years old, that brought some doubt in me. It started making me believe, look, I need to be careful. Yes, there's what my mom was saying, but I started doubting myself. Now, you see, the same statement is setting a different money mindset. And most times, when we start personal financial management, this is a place to start, that money does not grow on trees. That's the first point around making money. Now, the second point around making money is multiple streams of income. I know we've talked about it a while ago from Thomas's presentation, but I want to borrow from this gentleman called Robert Kiyosaki. He's written a book called Rich Dad Poor Dad, and from it, he's talked about multiple streams of income. So this is Robert's work, but we adopt it to help us drive the point. So you can make money from 4 sources. You either make money as an employee, that means you clock in, you give your time to make money. Success for you is your ability to climb the corporate ladder, whether at your place of employment or even you change jobs. Most probably you're climbing the corporate ladder. Now, the second way is by being self-employed. Now, here you are still giving your time to get money. Say, for example, you have a shop in town that sells clothes. You have to go and open that shop. If you don't open that shop, then you don't make the money. So you're still putting in time for money. Of course, at this point, you are all in one. You are everything for everybody. It's actually one of the hardest parts to make money, but it gives you the control that you need. It gives you the independence, which is okay. The third way you can make your money is by being a business owner. And for me, this is where it starts getting very interesting. Because then first of all, what's the difference between being self-employed and a business owner? A business owner has already created a system. This business is able to run with minimal intervention from you, or sometimes you can take off and the business still runs. Now, whereas a self-employed person has to open that shop every day, a business owner has managed to employ someone, maybe put together a stock control method. They can pass by there every evening and check how things are going, and they're able to continue running the business. Now, that's where we say you're a business owner. Success for you is able to spot opportunities and execute them. Remember, we are making money. Now, the last method is being an investor. And the crux of this webinar actually will be talking a lot about an investor, where in this case, you already have some money. You want to see how can you allocate this money profitably to make some money from what you're doing. I saw a question earlier from one of our participants and asking, I think they have 500,000 to 1 million shillings, and they're wondering, how can I make this work for me? We'll be talking about that in a short while. Now, when making money, we've talked about the first thing is your money mindset. The second thing is ability to have multiple streams of income. Now I have one more. Here I'd like to engage us a little bit. Please go to the chat section and answer this question. Now, this is a phone. It's an Apple iPhone 14 Pro Max. How much would you pay for this phone? I maybe don't Google for now from a memory about how much would this phone go for. Now, this question is important for me to explain a very important aspect around spending habits and making money. If I get maybe 5, I got someone saying 100,000 shillings. Thank you for that. Maybe 10 more engagements, 150K, 200,000, 60,000, 120K. Wow, they are running. I can see a 300K there. I can see a 50,000, 178,000, 135,000. Excellent. Thank you so much. This is very good engagement. Very good engagement. Asanteni sana. I do appreciate that a lot. I think my point has been made that we have a basic idea how much you need to pay for this phone. But look at it, okay? Assuming there's someone who earns 200,000 shillings. Now you pay taxes of 52,000 shillings, you take net pay of 147. But then this is the old rates, eh? I know there's all that talk about taxes and all that's going on, but let's keep it very simple for now. So daily, if this is 30 days, you can quickly assess how much you take home on a daily basis, which is the 147,617 divided by 30, which is the 30 days in a month, and you realize per day, you're taking home 4,921. Of course, we can all put our own figures, you can put your numbers, and you can quickly come with a figure that you daily take home. In terms of spending habits, there is a difference between price and cost. It is not the same thing. And this is very important in terms of making the money. So the price of this phone actually is about 189,000. So all the answers that we got there, I think on average, we are okay because I saw 300,000, I saw 50,000, but it will be about 189K. This is the price. Now, assuming you're going to work every day to be able to buy this phone, in this example, you will need to work for 38 days. Assuming you're not paying anything else, you're just working to get this phone, then it's 38 days. 38 days is the cost of this phone. So price is the same for all of us, but the cost is different. And now that's the thing. You start asking ourselves, in terms of making money, how actually do I spend it? Now, there's nothing wrong with buying a phone. There's nothing wrong even in spending 500,000 on a phone, no problem. But if you start understanding it's about the cost, then your spending habits change. Now, you can even take how much rent do I pay? Then what does it cost me? How many days do I need to work for my rent? How much do I pay for school fees? And how much do I pay for my holiday? And you quickly see that a very important part of making money is watching our spending habits, where we are saying that the price is the same for all of us, but the cost is different. Great, I'm done with the first part, making money. If you're taking notes, it's about your money mindset. You need to have the right money mindset. You need to have multiple streams of income. And thirdly, watch your spending habits. Super. I'm trying to lay a foundation before we come to investments, which is what I'm coming to. The second point, after you've made this money, how does it grow? This is what everybody's interest would be, considering investments is a very interesting space. Now, this one slide here is very important for us to understand how to grow our money and how to do what we call wealth planning. After you've paid your rent, you've paid your salaries, you have and you have something left over. Thomas has told us it could be dividends, it could be a salary, it could be increased shareholding. After you've taken that money home, either as a business person or an employee, how do you grow your wealth? So there are three things to this: debt, savings, and investments. And this is how it plays out. Debt is the red line, and I'm assuming stage 1 is where we are today. Stage 2, give it about 3 to 5 years from today. Stage 3, give it maybe 5 years and above. Of course, those numbers can change a little bit, but that's roughly how our financial lives will be organized. The idea is, regardless of the level of debt that you have today, and I'm taking it as the highest it can be, you want to start reducing your debt as you grow older. As you're planning on personal finances and you're asking, I'm a 16-year-old, I'm a 26-year-old, I'm a 36-year-old, 46, whatever the age, the general direction is you need to start reducing your debt level. I'm not saying debt is a bad thing, but I'm saying it's important to start reducing that as you move on. When it comes to savings, assuming you have no savings at all today, which is the blue line, then you want to start increasing those savings in a gentle manner. I'll be talking about the difference between savings and investments in a short while. Investments is where the answer is. You want to grow investments in the fastest way possible, and I'll be showing you a few options that you can use. This one slide summarizes how you grow your money. You reduce your debt levels as you move on, you increase your savings, and you increase your investments fastest. Now people ask, okay, fine, I understand all this. So where do I go from here? When we start with debt, we ask ourselves, is debt a good thing or a bad thing? I've had all sorts of answers and they're all valid. But in the interest of time, just allow me to summarize how debt goes. The first thing is to ask yourself, when you get that debt, are you using it for consumption or are you using it for investment or for growth? Consumption is where you take that money, it's debt, and use it on yourself. You buy nice clothes, nice shoes, eat good food. And I'm not about to say that is wrong, but what I'm saying is, having spent your debt that way, there is no opportunity for that debt to grow and give you back anything. You may shall. But when you take your debt and you invest it, you buy a small Uber vehicle or you buy a piece of land somewhere, as long as you're putting that debt in a place that is meant to advance you, you are on the right track. So in growing your money, it's very important to actually put your debt into very productive use, okay? The second thing, when debt is concerned, is ask yourself, am I making a profit from this debt? The financial organizations, the banks actually, even Family Bank is in the call today, they help us by giving us debt. And by the way, debt helps you with something called leverage. You're able to do more. So you ask yourself, so I got a debt, I was charged 11% interest. That is the cost I'm going to pay for it. What's important, are you able to make more than that 11%? So if you get a debt at 11% and you're able to pull it somewhere that gives you 17%, then I can tell you you're growing your money because you're going to be able to pay off the debt, pay off the interest, and you'll be left with something over, which I'm calling profit from debt. So when you're growing your debt, growing your money, always aim at making profit from debt. The last thing I'll say about debt is, who are you making richer? Always ask yourself that. If I take debt today and I go for a holiday, nothing wrong with it. At the back of my mind, it is the holiday maker who's gaining from my debt. So always ensure that you are making yourself richer through savings and investments. Remember, we are growing your money. The first thing is to manage your debt and always ask yourself, how can I make my debt a good debt instead of making it a bad debt? Point number 2, when growing money, is savings. Now, how does savings work? Savings helps you put aside some money to build capital, or you want to do something in future. I'll give an example. For example, let me say I want to start a small business. Same time next year, by the time October 2025 is here, I want to start a small business. Assuming my business, I need 100,000 shillings. Is it possible to actually start that small business without borrowing money? Most clients have said unlikely. It's okay to borrow, it's okay to use our methods, but look at it this way. Let's say the airtime I spent, roughly, maybe I spent 400 shillings a day, just out of a figure out there. If I'm able to spend half of that money on airtime, it means I'm able to save 200 shillings a day. 200 shillings a day for a month, which is 30 days, is about 6,000 shillings. If I'm able to do that for 1 year, that is 12 times 6,000, which is 72,000. Are you seeing it is possible for me to start my business same time next year by having a discipline in savings? We say that discipline is a place of being intentional and consistent. Small, and if you can make more than 200 a day, that's okay. But the idea is savings is step by step. You take step by step to get yourself there, right? There's a concept of emergency fund. We say under savings, emergency fund would mean if today I stop getting money from tomorrow, or wherever I get it from, how many months would I survive on my savings? Now that becomes the concept of an emergency fund. When you're growing your money, it's important to have an emergency fund. And people say it can be 3 months, it can be 6 months, it can be 12 months. Our recommendation actually is between 6 to 12 months. So that you know that should anything go bad, because things can go bad, where do I run to? Whether as a business or as an individual, that is part of savings. Now there's a danger of oversaving. Oversaving is where you put money aside without necessarily investing it. Okay, and now that's the difference. Savings will help you build the capital, but investments will help you make more money. Of course, most times you need each other. You need to have savings so you can invest. But let's look at investments then as a third thing. People, the thing to look at is there are so many investment options. Question is, how much can I make from them? And to the question that I saw in the chat today, someone is asking, where can I put $500,000 today? Okay. Now, how do I differentiate genuine investments from scams? This is huge. I've been in WhatsApp groups and you see people saying, I lost my money. I think this was a scam. This was a Ponzi scheme, whatever it is. But how do you differentiate genuine investments from scams? And I'll be showing you that in a short while. Where do I even start? And this is the crux of this webinar. After we've made the money, now we are growing it. We've managed our debt. We have saved. Where do I invest? Let me probably engage us a little bit more on the chat section, please. Go to chat section and let us know today. If you got a gift of 1 million shillings, now it is not loan you're going to pay. It is just a gift. What would you do with that? Where would you put 1 million shillings today? I'll be looking out for answers on the chat section. Where would you place 1 million shillings today? Remember, we are investing. From your own knowledge, from your own understanding, where would you place that 1 million shillings? I can see a few answers that have come in. Someone would say, use the 80, 50, 30 rule. Okay, interesting there. I imagine it means you spend some money on something, another bit on something, another bit on something, and understand that. I have someone saying treasury bills. I have someone say they would buy a bond. I can see money market. I can see buy some land, bonds and bills. This is interesting. I can see money market, First Point MMF. Great, great, great. Buying stocks from different startup businesses in an MMF awaiting the infrastructure bond. That's interesting. They'll put it in an MMF, but then wait for an infrastructure bond to come up. I like that. Money market, shares, buying land and shares, bonds and dollar funds, invest in land, in money market, education, interesting there. pay off debts. That's okay. But here we are assuming you have actually paid off all the debts, but we get that. Fixed deposit, complete my rentals, that's rental property. They are flowing fast and furious, but I'm seeing a certain pattern. I can see money market, I can see bonds, I can see land, I can see, okay, Uber business has come up. It means someone wants to go into a business. So that is the trend I'm seeing. I've seen someone who's breaking it down. 500,000 at money market, 200,000 cash flow, and 300,000 for treasury bills and fixed and IFB infrastructure bonds. That's great. Asanteni sana, this is great. I think let me read maybe two more. I would save a little money market pension fund, invest into our business, sort out important pending issues at home. Maybe one more, I would buy land and bonds. And thank you so much. They're really flowing fast and furious. And actually, you are on the right track. We are all talking about investments here. So let me share a slide here that then summarizes the indicative investments that you can make, and more importantly, how much you can get from each of them. Now, let me start by saying these are indicative returns. That is to say, it can either be more or less, but these are safe numbers to work with. Now, let's start by you taking that 1 million shillings and putting in the bank as bank deposits. Most banks, or on average, will give you between 2%, 4%. Now, I'm aware that Family Bank has very good products, even from introduction that was made. Speak to banks who listen to you. Think to banks who are personal, who can give you personal attention, and for sure, Family Bank is one of them. You can always get an improvement of these rates, right? I think the introductions, we talked about fixed deposit rates, we've talked about call deposits, and there's a whole solution you can get from Family Bank where bank deposits are concerned. But then, when generally speaking, let's say you walk to any bank today, when we say it is 2 to 4%, what you're saying, if you put 100 shillings in a bank at the beginning of the year, at the end of the year, you'll get an extra 2 shillings to 4 shillings for every 100 shillings you place the whole year. Now, that's how to read this table. If you choose to take your money in a circle, so that you can get dividends, you'll get between 5 and 10%. I said, I'm aware there are some that give more than that, but these are good range to start thinking about investments. If you put your money in real estate, I saw from the answers, land, I saw people doing their rentals, you'll get between 7 and 20%, depending on whether you're going to put this money in rentals, are you going to put it in your own building to stay as a residential home, are you going to buy pieces of land and subdivide into plots? Generally speaking, we're talking about 7 to 20%. Unit trusts, I saw that. MMF, I saw money market funds will give you between 7 and 9% every year. I saw treasury bills, treasury bonds. You can work with between 9 and 12% average. But of course, like right now, our own government of Kenya is giving 15, 16, 17%. So as I said, these are indicative numbers. It could be more or less. It depends on the government of the day, but at least we can tell roughly how much to work with. I saw people going to buying the shares in the stock market, Safaricom, Equity, Family Bank. They are all there, listed shares. You make between dividends, return of between 5 and 15%. Why is it that wide? Because it depends on the company, it depends on the industry, it depends on the economy, so many things, but you can make anything between 5 and 15%. Multi-asset global fund, you'll find people who would have funds that you can invest offshore. Okay, you can get plans like those, you make 15 to 18% every year. Now, of course, there's a lot more than just investing, more than what I'm putting up on this slide, but this is a good starting point. Now, I saw some people say they'll buy an Uber car. I saw that. Or you could start a business. There you might get very good returns, 30 to even 100%. But let me draw your attention to this part I'm calling regulated. When you say an investment is regulated, and I'm saying, for example, yes, when you say it is regulated, it means there is government oversight on how things are done. There are policies that have been put over time on how banks should manage their deposits, or SACCOs. You have SASRA. But when you go to real estate, there is no single place that tells all of us how to run our real estate businesses. Of course, you have the courts of law, should you want to, follow up your rights. But if I have a piece of land in Kitengela, I can sell it for 6 million, I can sell it for 60. There's no guidance. It is willing buyer, willing seller. In that case, you're saying it is not regulated. Not that it is bad, but there's no guidelines. Same for businesses here. They are not regulated. It's important to know that. Of course, as a general rule, it's best to invest in regulated investments initially, especially if you're starting off your investment journey. Yeah, you don't want to lose your money in the investment side. Of course, there's Forex trading. I know it is a big buzzword today. It's regulated, and you'll get a lot of money, 50 to 100%. But you need to be clear that the person you're dealing with is actually regulated. There's a lot of middlemen and players who may not be regulated, and you could be in danger of dealing with someone who's not regulated. Of course, the last one here, cryptocurrency, blockchain, and Bitcoins and all, it's an investment option, okay? But it is still not regulated, and the risk is very, very high. Just like you can get 50 to 150%, you can easily lose 50 to 150%. That's how to look at it. But this table here now summarizes what are the investment options that you can do in Kenya today and how much you can make. I'm seeing a few questions coming up. Probably I'll take time to look at them later on after the presentation, because this a slide that brings in a lot of questions. This is where you can place your money, and this is how much you can earn from it. Now, let me make a disclaimer. There's another slide I'm going to show you of investment risk. This is about investment return. How much can you make? But there's also something, how easily can you lose your money in each of these things? But I'll be showing you that. We are done with growing of the money. Remember, we have said managing debt. We've talked about creating savings as a culture. And thirdly, we've said investment options, which we've talked about what we can do and how much we can make. Now, lastly, you've made the money, you've grown the money, but how do you protect it? Again, Thomas made a very good observation around making sure you manage your risk. It's the same thing I'm talking about here, but you're talking about it from an individual perspective. Thomas was talking about managing risk as a business, but as an individual, how then do you manage your risk? The first thing is to understand there is no single investment which is guaranteed. All of them have risk. The ones I've listed there, even the treasury bonds which are said to be risk-free, there is an element of risk that they carry. And most times, when you're thinking about investments, is to come alive to that fact that it is very unlikely, in fact, I can say almost impossible, that you will invest your money somewhere and be 101% sure that there's no risk. So those ones don't exist. So what you do as an investor is to understand the risk. How do you prepare to reduce bad surprises? If something happens to investment, what impact will it have on you? And how likely is it will happen? And this is a very important part of this webinar. As you walk around the investment journey, it is very important to balance the risk and return. Please listen to me. It's important to balance risk and return. And now I've taken the same investments that we had and we've listed them into that matrix. Then remember, we said there's return. We talked about cash deposits, treasury bills, unit trust, and they kept growing until blockchain, you're getting a very high return. Rarely do we look at the risk. As the return increases, the risk is also increasing. And that's important. As you invest in, or as you determine where can I place my money, it's important to create what we call an investment portfolio. An investment portfolio, and I think I saw it in one of the answers, is you don't put all your eggs in one basket. You determine what do you put where. Now, usually from an investment perspective, it will start with your objective. What do you want to achieve? Okay, is it your schools, children's school that you want to pay in the next 5 years? Is it your business you want to expand in the next 6 months? Is it a holiday you want to take? Is it, you need to start with why are you doing that? After that, then you determine your age. Usually, the younger you are, the more risks you can take. Partly because you still have a lot of time to recover. Should you start something in your 25, like for me, I did my first business when I was, I think, 23, and it failed horribly. But I had enough time, first of all, to learn how to do business and also to recover, because I made more money and got into other businesses. But you can imagine in my experience, if I was 59, and that's when I'm trying my first business, and it collapses, most probably I might collapse with it, because I don't even have the energy and the mental power to withstand that. So age becomes an issue. Investment objectives become an issue. Your risk profile as well, because in this room or in this webinar here, we are all different. There are people who they are happy trying something new. And if it fails, they move on. There are others, if they know they're going to lose a shilling, they can't sleep. Now, there's nothing wrong with those two people. It's just that their risk profiles are different. Okay? So when you're creating an investment, you understand all those things. And then rule of thumb, you probably put about 30% of your investments in the low return, low risk area. That means about 30%. The million shillings I talked about, you have maybe 300,000 sitting around here, because you're not chasing return at that point, but you want to make sure you've managed your risk. If anything go bad, you have something to start off from. Now, the higher sections, where we talk about the higher places, the high risk, you can place between 20 again to about 30% based on the factors I've talked about: your age, your risk profile, your objectives, even your source of income. Okay, you might have inherited a lot of money and you can afford, you have the appetite for that, but limit it to about 30 to 40%. Then the remaining bit, put it in the middle. What you're saying here, the return is not too bad, the risk is not too bad, although I can now maybe survive inside here. We create what you call an investment portfolio. And really, this is the answer to how do you balance your risk and your return. Okay, I know Lucy, Jerry might be surprising us today with a question, so make sure you remember everything that I am saying in this presentation. Second thing around protecting your money is planning for your retirement. Now, I know in this call, we probably have people of all ages, but let me first of all deal with this. Again, on the chat section, please help us. What is the best age to retire? Just put the figure there. What is the best age to retire? Again, I really appreciate the engagements in these conversations. So I'll take a few that come in, but what would be the best age to retire? I've seen one, very interesting ones. As soon as you can, great. Another one said now, good. I can see 50, 40, 45, 50. As soon as you're financially independent, good. 55, 55, 55, 50 to 60, 55. I've seen 65 years, so that you can get my pension tax-free. I like that thinking. 55 years, when you're rich enough, 50 to 60, 50, 60, 50 now. Very good engagements there. Now, and I've seen a few answers which I want to amplify there. Retirement is not about age. Retirement is about a state. And what state are we talking about? Is when you get to a place where you have enough assets to fund your desired lifestyle. when you have enough assets to fund your desired lifestyle. Now, how does that look like? When you say desired lifestyle, it is very personal. I heard earlier on in the call, there are people who want to take a holiday, not backpacking. They don't want to backpack. They want luxury. They want to enjoy their holiday. They want to get the finest. Now, that is their desired holiday. There are others who would say, give me anywhere I can place my head, me, I'm okay. What I wanted is the experience and eating nyama choma in Congo, and I want to drive the horse riding in Marrakesh, whatever it is you want to do. You're not concerned about the look and feel. You just want to have the experience. Now, again, that is your desired. So when you say desired lifestyle, it's very different for each of us. It is you to decide what kind of retirement do you want. Once you've defined that, you ask yourself, how much will it cost me? Then you start working backwards. How much money do I need to be making to be able to live the way I want to live when I retire? How will I be making that money? Most probably, if you're an employee, you'll have retired. Most probably, if you're running a business, probably you'll be slowing down. So for sure, you will not be working very actively. So there you'll be depending on the assets you've put aside. You'll be relying on the investments that you've put aside. And that's now the second way of protecting money is being able to plan for retirement from that perspective. So that I say, it doesn't matter your age. You actually can start planning for retirement. There are people who retire at 12, and I can tell you how. You inherit property. You have enough property that is going to fund your desired lifestyle even before you start working. Technically, you're retired. So retirement changes its meaning. It is more than the age, and I think there's an answer that that were coming in that direction. But that's how to protect your money, because you don't want at that time all you've worked so hard to make and to grow is lost. Again, I want to engage us again on the chat section. All I need us to do is write yes or no, because retirement also, there's a mindset to it, which I want to bring up. So again, very, very quickly, how many of us have a mobile phone? This is not a trick question. It is a straightforward question. You have a mobile phone that is yours. You're writing yes or no on the chat. You have a mobile phone. This question is going to help us to get the right perspective around planning for retirement. So just write yes, I have a mobile phone. I'll not ask you the make. I'll not ask you how you use it. Even if it's a Kamulika Muizi, it's yes or no. I'll take a few that come up. Yes, 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 yes. They are coming. Excellent. Thank you very much. Now let's go to the next level. How many of us have a personal email account? It is not the work email. It's your own email, either Gmail or Yahoo, whatever it is, and use it actively. Again, I'll be looking out. I can see a lot of yeses coming in. Yes, they are flowing. Excellent. Remember, you're talking about retirement mindset. Walk with me. I've not seen a no. I'm just seeing yes, 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 yes. Excellent. I have a personal one. Thank you very much for that. Yes, I have an email. Let's go to the next level. How many of us have a Facebook account that you use and you're active in it? Please write yes or no. And remember, there's nothing wrong with writing no, And we will not even broadcast who it is. There's something I'm looking for. I'm seeing yes. Okay, I've seen the first no. Okay, let's keep going. I'm writing yes or no. Oh, I've seen a few no's. Now they've started coming in. No, 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 yes, no, yes. No, so yes, not that active. Okay, good. Now notice what is happening. The answers have started changing. And by the way, there is nothing wrong with that. That's in fact what I've experienced all through my training. But let's take it one step higher. Instagram. You have a working Instagram account. You know how it works. You know how those likes work. You know how to operate. in Instagram. Now, if you notice, I can see yes, no, yes, not using it, yes, my Instagram is active, no, maybe a few more, yes, no, yes, I can see them coming in, yes, but not using it, no, yes. The no's are slightly more. What am I putting across? By the time we're done with this exercise, I can tell you, I will not have any yeses. And that really underscores what planning for retirement means. But let's take it one more place. TikTok. You have a TikTok account that is active. Now, I'm not saying that you watch TikToks. I'm saying you produce on TikTok for people to watch whatever you're producing. Okay, please put a yes or a no. TikTok. Now, already the no's are many. It's just very few yeses that are here. I have no, 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 yes, no, not on a regular basis. Okay, I can see a yes, I can see a yes. Remember, it is you have a TikTok account which you produce stuff. You're the one who produces content. That's what I'm talking about. Ladies and gentlemen, when planning for retirement is to always remember we are going to get irrelevant. All of us are going to get irrelevant. The purpose of this exercise is to show where all of us are very relevant on a mobile phone. Not all of us are relevant on TikTok. Me included, by the way. Right now, I have a TikTok account, but I'm having to use people to help me run it. I can't pretend I will be the best TikToker in the world. It won't work for me. My time is over. So I'm starting to plan retirement in a certain way. Not that I will not use it. As I say, I'll get help. But as myself, Canon going into, I just can't. Now, soon, this is TikTok. Now with time, they'll become TikTok and TikTok and TikTok. My point is, it is evolving so fast that as we plan for retirement and protecting our money is realizing we will not always be the way we are. Let me put the last one here. How many of us have driven in a driverless car? This you can probably, I'm keen to see a yes. Hiyo sijawai, I hear you. I'm not talking about an Uber. I'm talking you got into a car that did not have a driver and that took you from place A to B. I'm very curious to see a yes. I've seen one yes. Good. I've seen one yes out of the 200 in this room. And you will notice, in fact, even percentage, this is 0.5% of the people in this room have ever driven in a driverless car. You will notice when you're planning for retirement, most of the time, when protecting your money, let's get the right perspective. We always picture ourselves as being somewhere here. That for me, Canon, probably I'm like here carrying this cell phone. But have I seen myself actually going this direction? And not even age-wise, even in terms of technology. So part of protecting your money is preparing for retirement in that sense. So the first thing about retirement was risk. Understand the concept of risk. Number two, prepare for retirement in the right way. The last one is understand the impact of the environment. Now, this is a picture I saw and it made me really think about things. Now, this person is saying, me, I just focus on my milk business. Politics is not my thing. I laugh. Now, I know in this nation, we're in a very politically charged environment. So what I'm going to teach is not politics. I'm not affiliated to any party or to anybody saying anything. Me, I'm teaching personal finance. One thing to protect your money is you must be concerned about the politics of the day. You cannot ignore politics in the realm of personal finance. When you talk about taxes, when you talk about how those taxes are used, when you talk about governance, when you talk about corruption, I don't want to preach to the converted. The point is, part of protecting your money is actively being involved in the politics of the day, whether in this country or whatever country. This person who's saying they just run the business, milk business, they can't. They are in serious trouble because there's a part of politics that is not working for them. And part of protecting your money is to ensure that you are actively involved in politics. Even if you're not taking elective offices, ask the right questions. In this call, if you're in a place of influence to influence politics, please influence politics, because that is a way to protect your money, either for yourself or for your generations to come. Great, great. I'm just done with my webinar. I've talked about 3 things: how to make money, how to grow money, how to protect money. But I have just one teaser question, which I'll probably request Njeri right now to help us, just to see that we've picked a very important point in this webinar. She's going to put up a question and ask us something that has been shared in this webinar. Then I'll be taking over to just make closing remarks. Over to you, Njeri. You can help us with that. Let me put down my presentation. Then you can help us with that question about investments. Over to you, Njeri.
Thank you. Thank you very much. Let us appreciate Kenon for that presentation. We sure know that we are not just making money to use and forget about tomorrow. We do have a plan for our money, and we've been given the options for that. So now I'd like to share the next question. All right, I'm trying to look for the next question here.
As Njeri is looking for that question, remember, it is one thing I have talked about very keenly, and I've emphasized it. If we get that part, especially about investments and how to balance off investments, we will move places. We'll go very far in investment journey, because why this question is coming up, and I've trained many times in personal finance, the question I get is, how much can I make? I also ask the same question, how much can I make, right? But in terms of you making, there is something else that I've spoken about in this webinar that as soon as Njeri is ready, we should be able to take it home. Njeri, let me know as soon as you're up and running. If not, I can always take it on the chat. If it's easier that way, please let me know, Njeri. Yes, I think you're good. Over to you.
Yes, I am. Thank you. Thank you very much. Now, to our question, just to see, have we been able to get what we were talking about, investments? When making an investment is our question, which one is not a factor to consider? Do we consider friends? Do we consider risk? Do we consider returns? What is it that influences us as we are making investment decisions? And the question here is, which one is not a factor to consider? Which one is not a factor to consider? We are 200 of us here. We would like to get your responses and just see, because it does help us when it comes to preparing the topics for you, to see how have you understood it, if there are any challenges for that. Which one is not a factor to consider? And thank you very much for being an interactive and an engaging community. Thank you for your participation. Thank you for even the questions that you have been asking, and we are coming to them. It is important for us to be able to appreciate you, because you are the reason that the businesses that are here do exist. And also, by the introductions that we did make, it is important to know the next help, the next assistance you're looking for, the next opportunity is right next to you. So yes, we can see friends is not a factor to consider. we can end our poll. Thank you that we have at least over 101 of us here who have responded, 108. Okay, thank you very much. Now, Kenon, have you come to the end so that we can wind up this session of the presentations?
Just a parting shot from Njeri, just maybe a minute or two, to just say, yes, friends is not a part to consider. It's a very simple question, but it's very weighty. If we get that one right, then we have very many things that are right. So in summary, what have we done today? We have talked about personal finance. In summary, you make your money through having the right money mindset, having multiple streams of income, and watching your spending habits. And we talked about growing your money. The idea is you manage debt, make sure you have savings, and you explore the right investments. Then lastly, in protecting money, make sure you understand risk and be able to forecast and retire in the right mindset and understand your money environment. Of course, create this balance between investments and risk, as the question has been said. I have a friend who was doing a business, or he was doing lumbering, kata miti na mbao and Desring. So he got advice that he can buy a power saw, which he did. And he was told that this power saw will help you become better in your lumbering business. So he bought a power saw, but when he went to use it, he continued using it as a saw. He never powered it on. So you can imagine he has a lot of potential that he's not using. One thing we do in personal finance, we say it is one thing to hear and understand. It is another thing to take action. That's why, in conjunction with all the sponsors in this webinar today, Wild International, Family Bank, Mwalimu Biashara, and Sandbox, we have put all this knowledge into a tool. It is called Treasure Chest. It is an app that you can access on Play Store. Please go there and download it. We're not selling anything today, but it will help you start getting direction on how then do you manage your finances. All things I've talked about are all embedded in that app. Then you also have a free sample class for you. Should you want to listen to us more, you can talk to us through Sandbox and take a sample class. Gladys is going to put this link on the chat. It is free of charge, courtesy of Family Bank, courtesy of World International, Sandbox, and Mwalimu Biashara. We'll take you through a free sample class for you to understand more how to manage your personal finances. So thank you very much. Over to you, Njeri. I've had fun, and I hope this was helpful. Asanteni sana.
Thank you. Thank you very much, Kenon. Thank you for just giving us a very detailed process of how to become wealthy. It is important to know that all the businesses that have partnered to bring this webinar, what we are looking for is for you to create wealth. Now, as we go into our session for question and answer, and granted that time is of the essence, we'll take a few. Would like to acknowledge the presence of Madam Nancy Njau, the MD of Family Bank. Asante sana for giving us this opportunity to be here, for having you and your business, Family Bank, and your organization be able to partner with us as we do this. Thank you very much. Now, this, I don't know whether to ask Kenon. Let me ask you this one. Suppose I have 500,000 to $1 million Kenya shillings. I'm not employed anywhere. I don't have a business, meaning there is no other income I am expecting to get. I want this money that I have to become my income, which can be paying me on a monthly, quarterly, or even annual basis. But the return can be divided into 12 months and be quite a good income I can rely on. What is the best investment I can make in order to achieve that? And then close to that is, I understand investing in Forex is regulated, but how possible the returns can be 50% to 150%. What is the risk therein? I hope you got that, Kenon. So when you're coming to answer about Forex, you can just mention one or two things about how to invest in Forex. Is an investment that is not government regulated anywhere in the world a dangerous investment? Sounds very good questions right there. Is putting money in education, insurance, and investment? And then this one is, where can I get information on dollar business as well as Forex? Over to you, Kenon. Those are your questions.
Right, thank you, Jerry. I will try answer them in the shortest time possible. Let's start with the first question around how to place 500,000 shillings to 1 million shillings. So as I said, it depends on your objective, which you've already stated. You actually want to be able to earn some money, and you will say it weekly, or you say it monthly, quarterly. So it's clear for you it's income generation. We may not have your full profile in terms of your age, but you've already told us that you're not doing any other business, you don't have any other income. So I'll just take an assumption you're 35, just out of assumption. So what that's important is to understand a 35-year-old has maybe 25 more years of active work, and they've already spent about 15. So when you talk about not having to work anymore, the maximum, again, and if you take it in terms of an investment portfolio, like I said, you put bits and pieces of that money. You might want to split it into different places. 500,000 to 1 million. If you talk about real estate, which is very common in Kenya, you could get plots of land that can fit that amount of money. But the challenge is they will not be able to give you the regular income that you're looking for. And that's one main area you need to look at. You look at liquidity. How quickly do you want this money to come in? So you start knocking that off. Then what's left for you would be, you could want to put that money into a government bond. Why a government bond? Because the risk is relatively lower and you get regular income. Because in your question, you want to be able to get regular income. Government bonds will give you, if it's a bond, every 6 months, you get some money. If it's a treasury bill, which is a bit a short-term one, then you're able to get your money back in 91 days, 182 or 364. However, you might also want maybe to invest in some shares of companies that are going to either give you some dividends, because again, the challenge with treasury bonds is it is fixed income. That amount that you're going to be getting today is the same one you're going to be getting. If it's a 30-year bond, if it's 20,000 you're getting, you're still going to get 20,000. So you realize quickly that time value of money will soon be a problem. So you might want to put some in bonds as well. If you have a small business, you can start, people starting businesses of 50,000, 100,000. It's a small one, but it can give you the baby steps that you need to grow. Maybe that's all I can say, but it's a very general answer because you need a lot more in terms of giving people advice on the investments. Forex trading and risk. Forex trading in simple terms, what does it mean? You're buying a currency today and selling it later. It's as simple as that. So once you understand, let's even take US dollar and Kenya shilling as an example. What's important to understand is what are the underlying things that are making the dollar go up or down. Geopolitics, very many things that are coming into play. So the ability to read where things are headed. If I hear the US government interest rates have gone down, what does that mean in the Forex market? It probably would mean that people in the US will start investing in Kenya because Kenya has higher returns than the rates they're getting in the US. What does that mean about the exchange rate? It means that the Kenya shilling rate will probably go up because people are pouring dollar into this economy. So it's about understanding Forex trading in that sense. It is not guesswork. It is not trying something and hope things will work. It's a matter of understanding what's underlying there. The risk that comes with it is that there are so many moving pieces towards Forex trading, and what makes one currency change. That's where the risk element comes in. Regulated people, yes, they are there. But the thing is, and of course, if you go to sites, the regulation sites, you can get to see who is this exactly, who's regulated. They should be able to guide you and make sure you understand what you're getting yourself into. Because most times you say Forex in Pesa, in fact, you said it's making 150%. Yes, it is. But there's a part that we need to see. It can lose as much. Remember the risk return? Let's not look at the return only. Let's look at risk as well. Education policy, insurance, is it an investment? Insurance's nature is for protection. It is not meant for investment. For starters, you take insurance as a risk management item. That is not to say insurance companies have actually become very innovative, which is good. They add riders and elements of investment in it. But remember, if you're going to insurance, you're not looking at investment at that point. You're looking for protection. So yes, again, it grows. It grows and you can get a return on it right there. I'm not sure. I think I've answered all of them. Lucy, let me know if there's any other left in the interest of time. Thank you very much for that.
Thank you. We are well advised. We are well informed. We are well equipped. Now we can make what are called informed decisions, knowledgeable decisions. And one thing that is coming out clear from your presentation as well as that of Thomas is that making money and multiplying money is an active process. There is no way someone can sit and hear that there is a certain place where I can go and get my money on a 600% return. I don't need to do anything and I rush there. We've been well cushioned. Ignorance is no defense, it has been said. So right now that we have this information, there is no excuse whatsoever not to make good money decisions. All right, thank you. Now, we did ask you some questions, and it is now time to give you the answers and the responses to that, and a small surprise. And the person to do this is Joyce Nyawera from Family Bank Customer Excellence, Head of Customer Excellence, to pick it up from there. Karibu sana, Joyce.
Thank you, Jerry. Thank you to both Thomas, Kenon. That has been a very, very enriching session. And from the chats, I think the audience has been quite engaged throughout. Thank you for that. So, Jerry, I think you do have the answers, or rather the winners on your end. What I can do is just show, I'm going to just show what we are giving. Phyllis at the beginning mentioned that Family Bank is 40 years old this year, and therefore we are giving the winners, you're going to announce who they are. We are giving the winners some 40-year souvenirs from Family Bank. Let me just show you what that looks like in a bit. I believe you can all see what we want to do. What we want to do is just make sure that you remember 40 years of Family Bank, 40 years of heritage. We are giving you a branded coffee mug every morning as you take your chai, as you start your day, either coffee, whatever you take, you remember Family Bank. I can see you love the look of that. We are giving you a notebook and we are also giving you a pen. And that is the pack that is being gifted to the winners that you are about to announce. Please confirm that you do have the winners with you. Thank you. Back to you, Jerry.
Super, great. Do we have the names? Do we have the names? We got them? There you go. The winner is, that is SK Muya. Is that for both questions or for one question?
Jerry, I believe that should be for all the questions.
Okay.
These should be the top winners.
Great. Excellent. Congratulations. And so, Madam Joyce, you said that they will be communicated on how to receive the awards.
Yes, that is correct. We have the details of who the winners are. We will reach out to you just to find out which is the closest or most convenient branch where you can collect these awards. Then we will onward send the same. Thank you so much. Back to you, Njeri.
Thank you, thank you. Thank you very much. Thank you for the participating individuals. Thank you for making the time to understand your partner, Family Bank, and understanding what has been the journey, even as we congratulate them as well for being 40 years this year. So we are finally coming to a close of our session. Thank you very much for taking the time to be here and to learn and to engage with us. Now, to hear our closing remarks, I'd like to invite Madam Phyllis Kimani, who is the Chief Retail Officer of Family Bank, to invite the MD. Karibu sana, Phyllis.
Thank you so much, Njeri. Thank you to all the speakers of the day. And I know we've really learned a lot in today's session. My take home is money doesn't grow on trees. I think we can all see that picture that was portrayed there. And said time is money, how to spot opportunities, and how we also need to invest on ourselves. And I think today we've really picked a lot home. At this point, I want to invite our MD and CEO, who is a wife, a mother of 3 children. He loves nature walking for reflection and unwinding. Very passionate when it comes to women leadership. She's our prayer warrior, if you didn't know. She's a prayerful woman, and she's our backbone when it comes to godly issues. Nancy is a stout and seasoned banker with over 22 years of extensive experience in strategic leadership, agile business transformation, building high-performance teams, client solution innovations, growth acceleration, asset and liability management, credit management, sales, customer service, coaching, training, and mentorship. Prior to her appointment as the Family Bank Chief Executive and MD, she served as a Chief Commercial Officer. Having begun her career as a management trainee, and has been holding various positions in the bank, including the Chief Officer Public Sector, Head of Strategic Partnerships, Head of Retail Banking, what I do today, the Regional Manager in Rift and Western Region, and Central Business District, that is the Nairobi CBD. He has vast expertise and she has managed numerous certifications. She's a certified public accountant, certified executive leadership coach through CDI Africa, an alumni of advanced management program from Strathmore University Business School, CIA Business School in Accra, Ghana, IESC Business School in Barcelona in Spain. And you can see she's really experienced and has a number of certifications. She's a transformative leader who holds various certificates in various disciplines such as coaching, customer experience, and performance management. Nancy holds a Master's of Business Administration, Strategic Management, Master's of Business, BA in Strategic Management from JKUAT and Technology, a Bachelor of Commerce, Accounting option from Kenyatta University, and a higher diploma in Human Resource Management. An active member of ISPAC, that is the Institute of Certified Public Accountants of Kenya, Institute of Human Resource Management, and Kenya Institute of Management. Her passion and commitment to excellence and team-driven approach has been instrumental in creating a customer-centric culture within Family Bank, driving business growth and profitability, and ensuring exceptional customer experience. That is Nancy Njau, our MD and CEO of Family Bank. Welcome, Nancy. And let's give her a clap as she joins.
Wow, thank you so much, Phyllis. That was such a long introduction, but I really appreciate that. And maybe to add it also, sum it up, I'm a servant to all, especially our customers here. It's been really a great joy to have this conversation with our partners. I've also learned a lot. In life, there's a lot of learning to do, and I believe that our notebooks are full of wisdom. Thank you so much for all the speakers. We have learned a lot, and I believe that you're going to also implement, because it is one thing to hear, it is one thing to learn, but it's also the other thing, and that this is the harder part, to actually practice what we have learned today. So I really appreciate all of us. Thank you so much, our customers, for finding time and joining us. As Family Bank team, together with our partners, we really appreciate that opportunity. I know my team has taken you through of whom we are as a Family Bank and what we endeavor to do. And I'm really glad that today we are speaking about managing our finances and investments, and also giving us the options to grow our portfolio. Family Bank, we believe in empowering our customers. In fact, our purpose says that we enable people to create and sustain wealth through access to flexible, affordable financial services. So even as we do this, we want to make sure that you create wealth and also you sustain it. And that is why we have such kind of conversations, such kind of webinars, so that we can be sharpened, we can be equipped as we make this money, as we create wealth. How do you make sure that then we invest and we have sustainability? And we write this on our core values. We believe in winning together with our customers. That is our core value number one. We believe that once we have partners like World International, our customers, we win together. It is not about Family Bank winning and our customers are not winning. So any information and any opportunity that we have to share things that can really impact positively to your business and also to yourself as an individual, will not shy away from making sure that we share with you. The other core value is our self-belief. We believe in ourselves and also in our customers' ability to change the world. You can change your small world. And how you're going to change this world, if you follow the conversation today, we want to change how we treat our money. Money is king. Cash is king. We need to make sure that at least we change, we transform ourselves as regards money, and we are going to transform our families. We are going to transform the society. And at the end of it all, we are going to impact positively on our world. And as Family Bank, we believe in you, our customers. We believe in you, our partners. We believe in being transparent. Even as we do this, we are doing it so that you can trust and reward us for it. We want you to feel empowered. We want to empower you as you run your business and even as you go on your daily affairs. We believe in humility. We say it is not about us, it is about our customers. So even as we organize this, we believe it's about you, because once you succeed, we succeed together. We say we are a family bank, we are a family, we are a Fuzu family. We succeed together. You've heard we've been around for the last 40 years, and Joyce has already given you someone a gift of 40 years of our heritage. You've walked the journey with us. We really appreciate the business support that you have given us. And I want to make this appeal. I know my team has spoken, but I still continue to invite you to patronize our branches, to patronize our service points, so that we can continue to walk this journey together. We believe there's a lot that we are going to do. There's a lot of opportunities, and together we are going to make it. This week, we are celebrating the Global Customer Service Week, and in Family Bank, we do it differently because we believe in customer experience. It is not an event, it is a way of life. It is what we desire to do, is what we desire to continue doing to you, our customers. So our vision is to make sure that our bank is anchored on as a customer-centric bank, and is going to be driven by unique customer profiling and unmatched value offering that goes above and beyond the services that we give. And I want to take this opportunity, our customers, to really appreciate even the time that you normally take. For the last couple of years, we have been voted and ranked as the best customer service bank in terms of in customer responsiveness through a survey that is normally conducted by Kenya Bankers Association. So we really appreciate that, and we ask that you continue voting us, continue giving us feedback where you feel we are falling short. Give us feedback. In Family Bank, we say that feedback is the breakfast of champions, and we believe once you give us feedback, we are agile enough to make sure that we correct and we ensure that we give you positive and good customer experience. So during this quarter and beyond, we still continue focusing upon giving you good services. And in the course towards the end of this year, we shall be welcoming you, our customers, to celebrate with us our 40th anniversary. So kindly, once we invite you, don't fail to show up. And as I finish, I want to say that financial management is very critical, is very important, and also the investment is very important. So even as we run our businesses, a time is coming when you'll not have the strength to run it on a daily basis. You need to invest so that it can work for you. So it's going to help you to build your wealth. So don't take that for granted. It's going to give you a lot of security, financial security. It's going to ensure that you spend smart. You don't spend something that you don't have, and it's going to ensure that you also achieve your goals. Every one of us sets our personal goals, and financial wellness, financial management is going to help us to do all that. For our businesses, it's going to give sustainable growth. As we manage our finances well, that are business related, we are going to have sustainable growth. You shall have the right kind of expansion. You're going to make sure that you access capital as and when you need it to grow. And financial management also allows you to do proper risk management. I was looking at the opportunity or the various investment proposals that were being taken through, and it was really marring the risks that are associated with it. So even as you go through this webinar, I believe you are taking something. Will not be the customers who are maybe taken away by when people come and they tell you you're going to get 30%, and we see it so much in our country, 30% of return. Sometimes the 30% is given like it is for only of every month you can get 30%, or maybe every month you get 10%. I think now we are wiser. We have been taken through, it is high risk, high return, and sometimes those opportunities that you're told that are very lucrative, they end up being very risky and you lose our money. But I believe that out of this conversation, we have changed, and I pray and I hope that we are going to disseminate the same information to the people around us. Let us impact. Don't just, one of the critical things on how to learn is to share. So all that information that you have received today, if for it to stick, just share it with somebody, share it with people so that you can help our brothers, you can help our sisters, you can help our neighbors, and all of us can grow. So as I finish, I would like to thank all of you, our customers, for making the time to join this webinar. As a bank, we also extend our gratitude for your support over the last 4 decades. Family Bank is committed to supporting you in your financial journey. We offer a range of services designed to enhance your financial literacy and provide tailored investment solutions. So this includes more financial training. So we shall continue to conduct this, and we make sure that you have the necessary tools to achieve your goals. For our partners, we are really grateful. Thank you for giving us our time and the opportunity even to impact our customers positively. And I welcome you to Family Bank. Welcome to this Fuzu family. We are with you for life. Thank you so much.
Thank you. Thank you very much, Madam Nancy. It was good to have you here. And kindly, before you go, we would like to take a photo with you together with our panelists. So kindly, yes, it's good to see you. Phyllis, Joyce, Thomas, Kenon, are we all here? Do I have my CEO? Chris, are you there? Let me see. Kenon, please have your camera on. I cannot see Chris. Robert, are you here? Or Monica? To represent Wild, Monica Gashusha, please have your camera on as well. I'm hoping my team Wild at the background, you're taking a photo. Monica, are you able to have your camera on? Robert, are you here? Okay. Anyone from Wild? Not taking too much time. And then let me know from the background, Wild, if you have taken the photo so that we can finalize this and also invite our participants to give us feedback. It is important for us to hear from them. Okay? Any comments about the photo? Would you like us to change our sitting positions so that you can take the photo well? And lovely smiles. Important.
Some of you are not smiling.
Some of us are not smiling. My dear people, let us smile. Remove those teeth. All right? Do let us know when you're done.
1 minute, one last.
You know, smiles can get tired.
Don't worry, guys. That's done. That's done. Thank you.
Super. Thank you. Thank you. Thank you very much. Thank you, Mwalimu Biashara. Thank you, Probity. Thank you, World International. And a big thank you to Family Bank. And happy birthday. Happy 40 years. Continue prospering, continue supporting families, businesses, because that is how we get to create wealth. And when we do create that wealth, then we know that it is in the right hands with you. Asanteni sana. All right, before you leave, kindly do give us feedback. There is a form that has been posted there, and we can post it again so that you do let us know how the experience of the webinar has been, your takeout for all the knowledge, the information that you have received about making money and multiplying money. And of course, if there is any other topic you'd like us to discuss. And as always, there are people from the representative organizations, Family Bank, Probity, Mwalimu Biashara, Wild International. If you need any support, any assistance, do give us the query, do reach out to us so that we are able to support you better. The only way these webinars can continue happening is because you give us feedback, you interact with us. Most importantly, we support you to be able to grow and thrive in your business. So kindly do give us your feedback. All right? And I don't know whether my team will support you with a good piece of music from the background to encourage you to give us that feedback. Yes, happy birthday to Family Bank. And actually to World International as well, because World is 20 years this year. Interestingly, half their age. All right. Okay, some good music from World team right at the back as we do fill up our feedback form. Yes, play that. Thank you.
At Family Bank, we know that banking is about more than just transactions. It's about building relationships. When you walk through our doors, you're met by a familiar face who knows and understands your financial needs. Our Visa cards are globally accepted and have enhanced security features for safe and secure transactions. At Family Bank, we believe that our customers are part of our family. We guide, we advise, and we grow you. Juu family ni kujengana. Njoo tukujenge. At Family Bank, we are more than just your bank. We are your friend, your ally. With our internet banking and Pesa Pap, you can transact from anywhere and at any time. Our Mdosi Junior account is specially designed to help parents teach their kids about saving. At Family Bank, we provide excellent quality of service to our customers because at the end of the day, we are not just a bank. We are your family. Njoo tukujenge. At Family Bank,
First, I'm a teacher, so you are here in a school. We run schools as the Lukenya schools, which are primary, secondary, and we also have technical college, teacher training college, and finally the Lukenya University. Our story of Family Bank is a very short one. It's COVID. March 15th, the president announces that he's shutting down the education system, and it just shuts down. Sometime in May, June, we start having a conversation with Family Bank. And lo and behold, that is where I call it a marriage with Family Bank began. They were the only bank willing to work with an educational institution without hope of knowing when we were reopening. So that is where we started with Family Bank in 2020. And in that 2020, Lukenya built a whole technical college in Makueni County, built a library that is now the biggest library in the 3 counties of Kenya. And I don't think we are looking back anytime soon. In fact, this very building we are in is also a Family Bank building. Bank is money, and when a bank makes it easy for its customers to access solutions and bold solutions, already I don't think it needs belaboring. For me, I go back to COVID again. Imagine a scenario where you have no cash flows and somebody is here saying, we trust you, we can see what you have been doing, we can look back and see what you have done over the last 30 years or so, and we think we can invest in you. So for us, it is the security of knowledge that we've got a bank that has got our back. If at that time, which was possibly the worst time for educators countrywide, Family Bank came in, for me that stands out as the one time that the entire product range of Family Bank walked into our lives and changed the Lukenya schools and institutions. What I personally love about Family Bank is that everything is a phone call away, and the personal touch that my local branch has extended. It makes banking so easy. It makes working, very, very seamless, and that there's never need to do big meetings to solve problems. Problems, you notice a small thing, you just make a phone call, and the bank is just there, ready to serve you. And the customer visits, they come out so frequently. I think every 2 months there's just somebody coming to check, are you guys okay? Maybe you've been too quiet, and that's been something very special. I suppose that's the family aspect of Family Bank. They certainly hug you tight, like the way a family would, and that's pretty, amazing. For the long journey we've had with the different bankers we've had over the years, that closeness of interaction is pretty unique.
I joined Family Bank in 2019. And I think that one is like 4 years and above now. Family was a bank with SME support, because that is where I belong. So they understood my problem very fast, and they quickly designed a product which was fitting into what I really needed. Yeah, I can recall that time I had to deliver a bulk consignment to a client, which was to be manufactured here locally. And I did not have money to finance the manufacturing of that product. So instead of giving me loan directly, they quickly did it directly to the manufacturer. And that made it easy for the manufacturer to start working very fast and within time, within the stipulated period which I was required to deliver the said goods. So Family Bank came in handy. And imagine, it did not take even more than 2 weeks. I was just joining, and the loan did not even take 14 days, and it was already been done. The bank has been very flexible, depending with what type of facility you want. So my experience with the bank has been so good that I can say that if it was not Family Bank, I would not be having Costa Cafe today. Yeah, because they are very ready. You give them an idea like bringing up Costa Cafe. I think I'd just finished some, I just cleared some loan, I'd just gotten some order, and I was getting that opportunity. So I just went to the branch and told them what I was thinking, what I was feeling. And they told me, no, go for it. And that's how it came. And I can tell you the account for Costa Cafe was ready within 2 days. Within 2 days, it was ready. The PDQ, which takes I don't know how long, was ready within 3 days. I don't know how they worked. But everything that I've been requesting, any assistance that I get from the bank, I request from the bank, I always get it upfront. So potential customers, I would say that Family Bank is a bank that prioritizes the needs of their customers or their clients. And Family Bank does not discriminate. Family Bank will always design a product according to what you want to get. The information that you'll give the bank, they'll come up with something to fit onto what you really want from the bank. Because this is well from my story. When I first joined the bank, in fact, what I wanted was not the normal loan, but they quickly did it, and I got the loan within the shortest time possible. So the bank is a listening bank, and any client who want to deal with Family Bank, I can advise them that without any doubt, everyone will get assistance, so long as you go with the correct information.
Okay,